All right, so we had a little bit of a pop and a dump at the open there. If we take a look at what we did last week, um, this was the last post that I made. Basically we're looking at a huge move through all of these red yellow lines, get to that gold bar, and you can see that triangle right there when I posted it. That's that same triangle here. We broke through the red yellow line. Now we're slightly above where we were. There's a huge gap there that we basically need to fill at some point, so no stops are safe dragged above the beginning of that gap. And now ironically that gap begins at the white dash line. So again, the one thing that remains the same is that any people that decided to hold are still, in my opinion, winning very big, and they have an incredible advantage because they only have to focus on how it's going to come down, and any bit of upwards movement is captured. Now remember that old post said that we're going to go to the gold bar. The gold bar is just a bit higher. That's the actual gold bar, 161. Like if you look at this post, the 161 is in line with the gold bar. So we've already cracked the high. And it's like basically looking for a hedge to break the entire support could take some time. But it's like, do you think that the institutions starting their day from buying from this point, like, yeah, they might have bought, but they're already in. It's not like they're starting their positions from here. Just remember that. So it's easy to overlap these kind of moves because it doesn't affect them because it's not like they're positioned from. The red zones have been formidable barriers overnight. Hmm. Nice. Ultimately, I think we'll make it through the red barriers. So like I said, we'll make it through the red bars. I want to see a step on top of them. This might not be the time, but doesn't matter if it isn't, because it will be soon. I can tell it's testing the waters. They're trying to see who's willing to bite right now. They don't find much obstruction. Many of the people, they don't have much accountability, so they're not here, and that's the interesting part about it. I think the big players are eager to keep that control. So now we've turned the second and final red bar into support. Nice acknowledgement too. I would say it touched it twice since it's been above it. Third time. Yeah, at a all-time high. The gold bar is imminent. Not many people stand in the way of the institutions. They might show up later today, though. Something tells me they will. Oh yeah, there you go. It's like I could have that indicator on like a separate chart just to reference where my ranges were. Well, it's like I wouldn't want it to make a range that's really really nice and then like take it away. See, that move right there was obstructed by people. They had to come out for it to make them uncomfortable at least. Typical for it to do this kind of movement. Up there, be the beginning of an 11 high zone basically. Multi high zone. A lot of people thought that was bearish. No, no. This whole consolidation up here is going to ruin momentum and it's still going to go higher. That's what I think is going on right now. Like, how many times have we seen that? We'll be able to tell the next time that it makes a consolidation and actually wants to come down. Like, if you've watched every other consolidation, you'll know. There will be something different about it. Like, it's coded into the way it consolidates. Most people leave the consolidation so early that they don't even get to learn that. But me personally, I've watched so many of them and seen so many of them, and they're all behind me now, and now they're just information. So like I said, multi-high zone, and continuously jab against the people who've shorted this spike, which is fine. I mean, if you've shorted it, it's not bad. Just make sure it's safe. Oh yeah, sorry. So just for the record, we'll take a look at the momentum. I'm like, yeah, it's gonna look like crap anyways, but I didn't even look at what it looked like, and I'm just like, I know what it's gonna do with that momentum, and it's not gonna look like it looks right now. It'll look worse. Maybe more things saying that it's gonna go down. And once everybody's dug their feet in, then they'll pay for the gold bar. Because it looks like the gentleman that, or whoever that made this happen so precisely, they've exerted a lot of energy getting through these red zones. These red zones have been probably the most formidable barriers of the past sessions. Now with them conquered, they don't want to pay for the advancement. This is what this is reeking of to me. They're trying to get the public to do it. Well, it's funny. The public hasn't woken up yet properly. And just because the institutions are ready and the public's not, it's kind of creating a weird situation, I think. But that's just the way that I see it. But if you think about it, with Christmas being on a Monday, there's people out there that are like, they do it on the day of, right? So it's like a lot of people have been drinking yesterday still, especially people on Wall Street, especially like just people in general. No, no, no. The institutions are here though. You can tell every move is like exactly as it should be, and I'm loving it like that. It's good. They just know now. They're like, all right, let's make it go sideways. We've had it go up, we've had it go down. They've done a couple moves in the morning just to see what was going on, there's a few people there, but I think that this consolidation is kind of showing that really this is what people are feeling, this grind. Not many people are moving it. And the rate of change of the candle is really slow. Like look at how long it takes for a fluctuation. Like it just takes forever to get anything. So that'll change obviously, but this is the first time that it's done this. Yeah. So I'm like, this is important because maybe it goes on for the same amount of time as the last one. And I'm like, if it does, well, isn't the time up? Oh, what's funny about this too, right? Is this one had a trend and it broke. The other ones didn't. Nothing really had a trend that broke here. It was kind of. This is like the first actual trend. And look at what? How it broke. Volume profile. Took it off to take a picture. Wow. Okay, so the volume that we've done um after the open still hasn't taken over the pre-market POC. It's not even close. But now we have a new trend. I do believe it will break shortly. Of course, anybody that's caught buying above both red zones might be met with a little bit of trouble. I'm definitely not a fan of. But we will see how the market chooses to treat them. If it continuously makes them into, losers over and over again, I mean, like, well, do we think like if there's a spot where just before that it doesn't, that's really saying something. If we notice that, hey, in the series of events, these harsh movements seem to be overlapped incredibly strongly. Any kind of upwards thrust that's incredibly strong. And it's like, what part doesn't it come back to? Well, the shitty choppy bit here. It's like, oh, you didn't find value in that. And I'm like, well, no. Like, who finds value in that? Like, well, the market does clearly, because if you buy into the excitement, you have to endure overlapping yourself with a loss. And I'm like, well, that sucks, because the people that bought the crappy slow bit that apparently nobody wanted are ironically safe. That's not always going to be like that, but it is like that now, and it was like that. So, I mean, like, it can be like that. So if it's like that often, should we position ourselves for, you know, safety in environments like that? Because, like, I mean, how often do we get that? A lot. I mean, every day, like every week, every month, we've been getting it. I honestly don't think they're even here yet. That definitely doesn't influence how much I spend on it. And I can tell, like I said at the beginning, that the institutions are here. The public doesn't matter if they're not here, honestly. We're not looking for the public to be here. We're looking for the people that respect these red zones, step on top of them, make multi-high zones, pop above red zones, and get to the targets. That's what we're looking for, these people to do that, not for the public to get us there. So right now, like, they deploy little probes and traps to see if the public is even there. And, we get little movements, spikes on the top, and little consolidations, spike on the bottom. So far, that's what we've done right here on top of this red zone. A way to, you could say, establish kind of a foothold in this area. Bit of a node growing. But as it is right now, there's not a thing that it's done that I don't remember. Not a thing that it's done that has been out of line. There's not a thing that it's done that can't be analyzed, that can't be understood. You know, there's nothing that it's done that's new, and yeah, it's all good. It's all good. Right now, one could say that it's on a fifth wave, if from the high. Whoops. 2, 4, and 5. The fifth wave yet to make break past the fourth. It doesn't have to, of course, cut off or truncated, as they like to call it in the 1930s. I mean, like, why? Why did they make it like that? It's strange for sure. Like, why would anybody choose to make something that works a little bit different? But it's remarkable. Because, you know, it not being the way that it always has been obviously is not good for some people. So, I mean, like, that's a funny point, really, because it's true. I mean, who would decide that it shouldn't be good for the people that have had it good? Because the people that have had it good are the people that have traded the five-wave move correctly. Here, I'm just gonna get my coffee. But yeah, no, it's crazy. I was like awake all night. I had like food poisoning or something. It was brutal. But like, it's crazy. I know. But what's crazy is like, it was like brutally like painful and everything. And I was like, oh man. I wake up and I feel like I'm like recovering, and it's like it's good. It feels good to recover. I don't know what it is about that, but it gives me energy. Like a good feeling. Out of all that pain and suffering, I'm like, fuck. Or what's up? I don't know. I stopped for some lunch at some Indian food place, but I'm like, that did me in. Right. We've broken the line. And it worked as it should. But it's small, so the result is as well. It doesn't always have to be like that, though. As in, small trends can make big ones when broken. But in this case, what's supposed to happen after a five-wave move? Well, a three-wave move. And if you think about it, well, the five-wave move is supposed to break the trend. If it retests and continues, that's 3 waves, which is a fact. Think about it. Like what I just said was, if we get 1, 2, 3, 4, 5, right? And then it breaks the trend. That's 1, and then retests the trend 2, and then 3. That looks funny, but is it something that it can do? Oh yeah, it can, and it can look just like that. Instead of looking all proper like 1, 2, 3, 4, 5, and then making a nice inverse head and shoulders. You know, if this high right here was a little bit shorter, yeah, maybe we could make that line test. Ugh, that's nasty though. I just know that if we were like sorry, 1, 2, 3, 4, 5, and then we broke, retested, and continued, that could work. That's a little. You could see how this could come to touch that, and it would still be a right shoulder. I mean, what are we doing here? We managed to go 1, 2, 3, 4, 5, one crappy dip, and then yeah, or no? At the end of the day, I'm like, as if I would doubt anybody's trading that. Like I said, but if you're already in, then you can benefit off of getting up to the gold zones above. I mean, that's fine if you've taken a trade from here, but I'm like, I didn't endorse it. But if you're profitable, make sure that it's safe to continue holding. Like it's a sweaty trade being in from the red zone, expecting it to continue at any time. I mean, it's like the question becomes like, what happened before? And then I'm like, okay, well, there wasn't much before today, so it's like, what happened the day before today? Last session. Every time I say yesterday, I mean Friday. I just don't have to think about, oh yeah, it wasn't Friday, it was the weekend. I'm like, I'm wasting time thinking about that. I'm like, no, no, yesterday means the last session always. So at the end of the day, obviously we weren't trading yesterday, but when I mean yesterday, I mean the last session. And I'm like, you want to know what's funny about the inverse head and shoulders that comes after the 5 wave move? Nothing in the textbook says it has to play out. Just has to form. And you know how you want to know what forming a head and shoulders means lately? It means making an inverse. It doesn't mean actually reversing anywhere. It means actually staying at the same spot for the exact same amount of time and space that's already just spent there. And I mean, like, that's a huge waste of time. It's like, okay, everybody thinks that this is going to provide something for them. It's going to provide them a move. It's going to like double this maybe and take them down like that, maybe, right? Something. They're looking for something. They're looking for this big old trend to break, and like whatever the hell happened before is coming to an end, right? The entire trend is reversing off of that. But in reality, what has been happening, not what's going to happen, but what has been happening is this, which is a huge waste of time. Think about it. When we do this, how many times do we go sideways? How many times do we touch the same sideways point? 8 times. One, two, sorry, I crossed two at once. So 1, 2, 3, 4, 5, 6, 7, 8 times at the same level, where every single move in this sequence effectively makes it back to this red line. And I mean, like, well, how is it not a consolidation when it does that? And then I'm like, take it one step further, connect those highs and connect those lows, and what have you got yourself? Well, you've got yourself a triangle. And within the confines of that triangle, it is consolidating until it ends the triangle. And I mean, like, here's people thinking that it's actually going to move from here. And I'm like, well, that's just one way to make people wait. And it's like they're just so much less likely to be in for the pattern after that, after you make them go through that. It's like you can count on a lot of people just to kind of give up on it. And another thing I've noticed is a lot of continuation patterns at the high um, can lead to whatever playouts that they have having incredibly strong retracements. Because I'm like, what is the benefit of seeing an inverse head and shoulders at all-time high? And whatever playout it does give is kind of tainted. like, oh yeah, these people that find value in being in all the way up here, they're all getting excited about those movements to the upside from here. I'm like, the people that have been in, like, see it coming and they know that they're in for it, and it's not something that they're planning on, selling, quickly. So if it moves up like this at the high, like let's say, you've chopped, chop, 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 and then you caught that chop and it goes up, right? And then, you caught the chop and it goes up again. And then all of a sudden, uh, now when it goes up again, it pulls back the majority of its push, and then it goes up to a new high, and then starts chopping and pulls back the majority of its push, and then goes up to a new high and starts chopping and pulls back the majority of its push. I mean, you can see how bad this is for the people that haven't held. Because I'm like, okay, unless you're buying in here, hoping that it's going to continue for you, sweating buckets, buying high, expecting it to go higher. And I mean, like, well, the next time that we do a 61% retracement on the whole thing, you're likely to be within it because you've been buying high. So I'm like, when they do a wipe of the whole range, you're going to be uncomfortable when it comes to that. And I'm like, okay, um, so how do we avoid that? Well, we have to start valuing holding long, well, not just long, but holding the core for longer. And having more accountability, because you have to look at it like the other people don't have the accountability and you do, and that is an advantage for you, and you take pride in that advantage. And anything that you can do that gives you more of that advantage, whether it's having the discipline to wait through environments that are otherwise really toxic, or you know just basically persisting with environments that are otherwise difficult. Hold on 2 seconds.
Right. So let's take a look at momentum. After a prolonged consolidation, we can see that the momentum does look different than the last time we looked at it. However, the price has remained the same level that we were looking at it pretty much. The momentum was here when we were looking at it last, and it's come down significantly. Might even have a little bit of a fake out. And I'm like, okay, contrary to popular belief, many people will not be looking for it to break that line, but that is a red yellow line. Contrary to popular belief, many people have been trained by Google to assume that that line will not break. That's the line that will break to bring us to new all-time highs. Contrary to popular belief, it's part of somebody's plan, but everybody else just thinks it's the random nature of everybody's bad trading strategies that makes the market move, completely discrediting the billions of dollars that's managed by all the professionals on Wall Street. And watch them do their work because it is part of a plan, not random nature, no hope, no dreams. All about retaining, maintaining, or obtaining control. And the people aren't interested in doing any of that. They just want money now. And as soon as they have it, they leave. I'm like, the institutions don't have that luxury. Some may see this as a triangle, but I put the emphasis on the line that I see is going to break. And it's like, not to be, what's the word? Scared of the triangle. It is a triangle. But it doesn't change my opinion of it. What it does change is that any movement that we get on the top is subject to being part of a retracement in the future, like as it already has been. But have we tested it enough to not need to test it in the future? Nah, not even close. It's like, God help the people that are part of the next push. As in, part of the next push by being buyers in the next push. If you're already in from before, that's fine. You can be part of it. But people that are making it, I'm like, it's hard for me not to cringe. It takes energy. I'm like, I'm denying my ability to. I'm denying my cringe right now. But I'm like, yeah, no. Usually, I would cringe at the thought of buying above the triangle that lacks a retest. However, you know, I'm like, what is it to somebody that's already in? If you're waiting for essentially the consolidations to lead to pops that take themselves back, what is it to just wait? I mean, like, if it wants to keep taking back every exciting move that it ever makes again, that's fine. If you're in from, the longer you're in from a go, the better, right? And it's like when we're at daily lows, I'm like, it's offering an opportunity to have this. I'm like, insane. You can be in for every single advancement that Wall Street has to the upside again. And I mean, as soon as America starts screwing up, we could do it with China or whoever else is going to be making wherever the money's going to be. But at the end of the day, I'm confident that whatever market is moving the most, it can be calculated. Mhm. Okay. Yeah, it's remarkable how similar yours is to mine. That one, because you can see how the spike came into the bottom and then the other spike, and I'm like, ah, there's a spike at the bottom in there as well. I like that. And I can see that this spike, has pretty much already happened here. It's an interesting thought, yeah. Because it's definitely in the business of doing that today. Because think about it. When we made a spike here, it kind of made this on the other side. It's disproportionate, but what is the concept here? The concept here is that it moved down really sharp and then came right back with the same speed and velocity that the dump happened. And then it capped itself off at the beginning. And yeah, it was quick. The second one took a little longer. Remember, this was the open. So I'm like, well, but then what? Look at the size. Why is it the exact same size? Give or take like a tiny bit, right? And I'm like, okay, same size, same concept. And then it just so happens that, they're symmetrical, separated by a small consolidation. The baselines happen at the same level. And then I'm like, okay, it's not where it doesn't just end there. You know that as soon as it was done, this movement, the movement that it chose to do was this spike up here. And then it made a consolidation here. And then decided to do this movement right here. Remarkably, exactly the same thing that it just did a minute ago. And I'm like, when does that end? And is it doing it again now? We just haven't recognized it. And I'm like, probably. And I'm like, okay. The last movement that we did have here is ironically separated by a consolidation that did bring us, ironically, a very similar distance out of the top that we were out of the bottom. Is it okay if it comes back to test the triangle? Of course it is. But is it a deal, like, is it the end of the world if it comes back to the triangle? Well, it shouldn't be. You're doing something wrong if it is. Because one thing, the only people that it's bad for to come back to the triangle are the people that have bought above it. And I'm like, that's just the market trying to tell us that, technically you're not supposed to buy above the triangles like that. It's like not good. Like, I mean, why would the market make people into losers so much that do that? And I mean, like, I can see that so clearly that I'm like, well, it's to the point where there's some things in certain market environments that are very likely to hurt you. So making those things very clear first is good before you get involved with the environment, which is an interesting, new, different way to look at it. A way of, like, it's a situational awareness thing, but at the end of the day, it's like, okay, what are the worst dangers in the environment that I'm going to get involved with? Like, those are the things that you pack for first usually. I'm like, in a real life environment, you would think, like, you put the bear spray in or whatever if you're going in the forest. But then it's like, uh with this, I'm like, well, if they have it in for a head and shoulders pattern where they just keep making them fail over and over again, doesn't mean it's never going to work again. But it means until that trend breaks or until that channel breaks or until that area comes to an end, that pattern may be enforced the way that you see it until that trend or consolidation ends. And I'm like, okay, fine. And I'm like, well, now what is our trend? Well, we can see we broke the last trend. I was like, yeah, it's going to break that trend. Contrary to popular belief, even the momentum was down. I'm like, what do you mean? It went down the whole time. I was like, well, from this point right here, we were talking about it before, the momentum went down, 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 and it just went sideways. And now we went up. I'm like, the audacity to go up on that volume, right? Or on that momentum. And I'm like, things are high. And it still wanted to go higher. And I'm like, why? Very strange. But it's not good for someone, and that's the thing. a lot of people, they understand buy low, sell high, and when you look at the market, it's very hard to, have an argument for that you're buying low right now, right? Like I'm like, what would the argument possibly be that you're buying low at all-time high? This is the daily chart with, history of what's happened since 2014, right? And effectively, we've come all the way up to new all-time highs. We've never been here before. This is the highest the market has like ever been, save like a few points since last week. But that's fine. Um, it's great for the people that are in, and you know that the institutions are in. They're not just starting now. No way. You know, like wow. Okay, hold on. When I just looked at this right here, you notice that the pattern that we were just going over on the short term is literally right here. Like it's huge. It's like a giant spike down with a giant spike up here, separated by a consolidation. I just noticed that component number one, component number two, component number three. Check out the size of the triangles. It's not exactly the same size, but still interesting. Yes. So of course, let's go over that post. Huge fan of getting the gold bar on top of this range. The gold bar is near. We've managed to squeeze everyone that is here out of the way to get to this point. And I mean, when I look at this, I mean, that gives me deja vu to the daily chart. I was like, weren't we just looking at something exactly like this, where it's like, oh yeah, we ran up, on the daily, made the all-time high, and now we just got back to it, kind of thing. It's kind of like that. I'm like, well, what I see here, kind of going on here. See, component number one is all the way up. Component number two is the down, and then the second high again for number three. And then on the 1 minute chart, we've got the same thing going on: up, down, and then back to the highs. So beware of any retracements back to the tip of the triangle. And that could be from any point on from now, and also at any point in the future after having done this, we may do it again. In fact, I find it very likely that we will. In fact, as well, we have to consider that whatever distance that we've done on top of the triangle, it could actually come out of the bottom of the triangle. Now, what would that look like? Would it be this low? You know? That's the size of the range there, no? God forbid it was going to use the range. Well, you wouldn't be wise to drag a stop within the size of that node, because if it is to use that whole comfort zone like it has been, well, that's gonna knock you out, right? So I'm like, all right. Of course, any hedges that have been taken back to the tip of the triangle have to be acted on quickly. There's a chance that they could be taken back very swiftly in aspirations of getting to the gold bar above. And it's like it's funny to me too, because like as I explained all of that, I was talking about how people were risky to buy above the triangle and how all this stuff. I mean, like, look at how long the market takes to show us that this is the case. That it did make sure that everybody that bought above the triangle was a loser and that is uncomfortable. I did say that that would be the case. I mean, like, for all the time that the market has taken to do this, there's nothing else that it has done for anyone else. So we have to understand that this is what it chose to do. And understanding that this is something that it can do is really important. Because God forbid you thought it was going to do anything else. That's the interesting part about it. And I love that because it's control. I'm like, God forbid we were out of control while we were doing this. So what? It doesn't move very much right now. But at least we know why it's doing what it's doing. And we anticipated it. Honestly, I didn't anticipate that it was going to take this much time, but yeah, no, the whole concept is the same. And I'm like, time, it doesn't really matter because I'm like, unless, we're going to like dissipate before the close or something like that, then we've got the time for it to do whatever the hell it's gonna do until it closes. And I mean, like that's the interesting thing. And I'm like, well, so time doesn't become a negative for me anymore. Like it definitely used to be, because especially when you don't have the money as well, it's like, oh, you're like, well, you want the money, and putting the time in is harder, but as you go on, it gets a lot easier to put the time in. You see the value in it. There's nothing like maintaining, obtaining, or retaining the control. And it's like, why does it just come back for the people that decided to trade at the worst point above the triangle, and not a point more? And now we're on with an advancement through the entire choppy bit, almost like it's pushed everyone out of the way. Like the chop was a bit much for some, and they couldn't hack it. And it reminds me of what we did before. Like this entire push, or most of it, can be taken back in a name to try and get rid of anybody that's chased it. But I'm like, right now, I think that they're actually probing to see if anybody has chased it. Now they can tell, they're looking at the numbers, but at the end of the day, I think the numbers, the tape is kind of a rough thing to start to develop a relationship with the amount of dark pools that are out there. And I'm like, well, I clearly don't need that. So I'm like, I'm not going to have something else that potentially could psych me out be in my trading strategies, you know. And I'm like, well, they psych people out all the time with those numbers because they can manipulate the spread. They can manipulate the amount of orders that you see, make you think there's volume where there's not and stuff. I know it's illegal, but good luck catching them. It's called spoofing, and it's illegal. But it's only been made illegal because people do it. So, and it's hard, to say that somebody's intentionally done that, because you have to say that what they're doing and how they're doing it is intentional. So they intend to get results out of the actions that they basically are taking to manipulate the market. And their response could always be, "I didn't know it was going to do that." So I'm like, at the end of the day, it's hard to say that, hey, oh, you made a trade, and oh, you knew that what you were buying was going to go up because you were buying it. And it's like, well, how did you know that? How did you know I was going to do that? Don't really know. If you got like a gajillion lawyers to back you up, I mean, it's going to be a hard fight, especially when there's no like proof that you could say that somebody is manipulating the market. How do you say, like, it's easier to pick on the bigger entities, but look at how the entire advancement was pulled back down to the baseline, tip of the triangle. And as I mentioned before, it doesn't have to be just one, but it can be multiple highs across the same level. And also, the idea of it making the same spike out of the bottom is still on the table. It would still be very symmetrical. Fibs can be adjusted. It technically did go sideways, down, and then up. So we could be in for an expanding triangle. It would be quite interesting to see if it was ever interested
and getting to a line like this again. Yeah, the divergence should have been developing for quite some time now. It's just yeah, I can clearly see that it made one high and then another high here, so even higher highs, and then now it's starting to make well, it still made higher highs here, but oh, the RSI, yeah, that's making lower highs, yeah. And then the histogram, as I was also going to look at that. That was one thing that's really taken a dive on the MACD. You have to be careful with shorting it though. Like I said, the blue line, it could be an expanding triangle. It doesn't mean it's not going to take back every single bit of the move to the gold bar. But I mean, like, it's like that could be on the table. Um, I'm like, with what we've had here, it seems that the market is getting a little bit more volatility. We've just hit a 61, which ironically is the high of the range there. Everything beyond the 61's only ever been wicks and spikes, which is interesting information. Like, it gives it help. But then again, I'm like, if it decides to break through a level like that and actually step on top of it, it could mean the end of this entire consolidation. So I mean, like, that what that means is, like, any short trades inside of this consolidation are in major danger if it breaks above the 61, which is an interesting contingency. Looking like that's the case. Oh yeah, thank you. The idea that
it just made an all-in-one head and shoulders to inverse head and shoulders. We were talking about this one earlier. And this is another version that actually has a five-wave move inside of it. And then the one that we're doing right now is an interesting one. It's like this usually. Yeah. So like the idea is we have a high, which is like a left and then a head and then a right, kind of like how we had this pattern right here. And it was capable of taking us down to there. In all reality, that's the result of what that pattern did. And then it shows inverse as well here. And like that's what we have going on right now. We have this left shoulder that goes into a head. It goes into a head, goes into a right shoulder, and then we've just kind of dipped down like that, which is kind of interesting because, just like what we have here, it has a high with a higher high and a lower high, and then a low with a lower low and a higher low. So all of the components are the same in this sequence. Now, you want to know what's interesting about that is they all have this triangulation, except for this one really. But this one does. It's another one of those that can be triangular. Now, you want to know what I love about these schematics is that when they've done them, they are finished. Something else can happen. This is where that next thing happens. We've crushed the 61 and stepped on it. Like I said, that was major danger for those that were short. Not to mention that the last part or the last pattern in the sequence was an inverse head and shoulders. Like when we were at this point right here, it was a head and shoulders that hadn't played out because it had a high with a higher high and a lower high. The inverse head and shoulders had yet to make its right shoulder. And because of the right sorry, the head and because of the head and shoulders, it was the high and a higher high and a lower high. It ended up coming down into a low with a lower low and a higher low. Now we are rivaling the highs. The blue line is not looking so unrealistic after all, you could say. Now, what are the odds that the spike that we've had here after the consolidation is going to formulate itself again? And what would that look like? I'm just putting that out there because I'm like, that's what we've been doing. That was the last thing that we went over was the fact that we've spiked out of the consolidations on both sides. All of these things could be, the last time that we see them for a long time as well, because they've made them quite obvious. And I'm like, a lot of people don't analyze it like I'm analyzing it. They don't understand the facts as they've come. They try to push their own strategies over top of the environment. And I'm like, well, there's not one thing that I haven't went over today, and everything that I've said is factual of the environment. Everything that I've said about technical analysis, at least. When I talk about the institutions and so on like that, it's like I can't even prove to you that they exist. So it's theory. But I'm like, it can't be the work of the public, and all of their strategies that allow them to be in disarray and perpetuity. I'm like, they're just constantly in disarray against the composite man, which moves the market very clearly with very, very, very clear and concise moves that are meant to be understood as the way that he presents them. And what I love about it is like this is not something that you find on Google. Like it's through my experience that I've managed to find the head and shoulders to the inverse head and shoulders and how it triangulates. And it's like a lot of people they leave because of these consolidations. I'm like, how? How? There's so much to learn in them. There's so much to understand about them. And I'm like, well, a lot of people they can't see the value because it's not making them money now. And I mean, like, is it not true that we are in an expanding triangle? And that every single point to this triangle, from the point that it started to the last point that we were at, it is now higher. Interesting. Major danger it was for the people that were short because it did make a new high. Now we step on top of them because they're distraught right now about the way that they've just been stopped out after so much excitement. They thought that they had it. Now all of a sudden, the slow grind continues, another small advancement, just like the last one. Interesting fact to remember. And the little dip, it's for people to get their positions back again. They've been stopped out again now. That's that's part of the grind. And I'll tell you one thing. There was I've definitely been caught in that before. There was something called TVIX back in the day, and when I first ran into it, it was an interesting relationship that I had because it was like it would move really heavily, and it was a volatility index ETF, and it it would always be the thing to trade if the market was going to remain volatile and if it was going to, keep moving around, it was good. But there were days when the market would continuously go up and TVIX would just drop and drop and drop and it would drop all day. And other days where the market was going down, TVIX would go up so much. So it was an interesting stock because, well, it was an ETF. You would trade it just like a stock, though. But essentially, that was a really important tool for everyone because of the fact that if if you were in an account that couldn't short, like a cash account, or something like that, um, it was really attractive to be able to buy things that could go up when the market was going down, and that's what the appeal was at the time. So it's there would be days where like it would be really volatile and it would always come back to the mean, and I'll never forget there was a day where it just didn't come back, and it was a bad day for me, and it was definitely a learning experience, and I could see it was a series of small advancements, and it's like it could get you like caught in that kind of squeeze is what it is, and you really feel the pressure of the squeeze in those small advancements. And what's funny is like you can take a look at any of the major dips that we've had today. They've all been taken back very swiftly, just like the pops have been too. And I mean, like, well, how is it capable of moving anywhere if that's always the case? But I'm like, the majority of all of the spikes that we do see, starting from every spike that, from the beginning of this trend, has always come back to the beginning. Then you look at this advancement here, I'm like, that's the majority of that spike right there. Unless people were buying in this area here, like a lot of that spike was taken back. And then I'm like, okay, here's what was taken back of that next one. It's like major. And then, like if we look at the ones to the downside too, like that was taken back entirely. That one was taken back entirely. This one was taken back, but it was a lot slower. And every single one of the spikes as they're made, it doesn't really matter how you look at it. They're really aggressively taken back. So what we do have here is truly a bow tie, like an expanding triangle after a symmetrical one. It's obviously it's not exactly perfect like you'd want it to be, but um, like how you would usually have one is that pretty symmetrical though. Which mine does not seem. Yeah, yep. That's the longer term one as well. This one up here was one that was placed not too long ago. But it is true that the last spike that we made down here was taken back, and it seems like that advancement was made, again, roughly in an attempt to make things even. Now, I can say one thing about the spikes that we've had today. The first ones have always been quicker than the next one. So we've always seen that no matter if it's doing this or if it's doing it in reverse, this one here, for instance, versus this one here, notice that the baseline, it's the same, right? Like this point here, the beginning of the triangles, and the second one's bigger. And I mean, like, well, okay, when it did it here, that was the same thing. And I'm just like, okay, is it not true that this was a spike? It went down as fast as it came up, roughly, and this one the same. And is it not true that they both started at the same point and ended at the same point, separated by a small consolidation, basically? So I'm like, it's a fact that that's the case. Now, let's see. Curious about this line right here. 61. It like tripped past it and it's trying to test it from the underside. Which I tell you one thing, that's not uncommon in this environment here. We've kind of using the 61s. Like I recall it being part of the expansion a different time. Now you want to know how it worked that time? It came down to the 61 here, made a new high, and then crashed and took the whole thing back. And somehow ended up at the high again after. I mean, like, that's a hell of a way to move up. And I mean, like, it's a very toxic way to move up as well, if you think about it. It's tough. And I mean, like, if it was to repeat that process again, but in a larger version, interesting. Oh, yeah, I'll have to post a picture. Let me see take a look here. Oh, yeah, to the top of that square that you had. Nice, man. That's what's up. Beautiful. Take a look here. Well, like a channel, but that's yet to double. Mm-hmm. One thing that I found that was really interesting about the movement that it has done, if I placed it on top of itself, just like this, very, very simply, right? Like you can see that the first part of this portion was right here, and it came down to the 61. That was the deal with it, right? We all just understand that this was a 61 right here. That's the 61, and it came down to it. I'm going to remove these fibs. You know that if I take another fib set and put them on the top, that's where the 61 is, right? So like this entire move was another 61. Which is kind of interesting that that if oh, this is the move that it did make. basically I've taken it again, same move from here and placed it on the top. And what I find is that's really interesting about it is that this entire sequence has happened again to get to the 61 without changing the fact that it's only done one move, this one. And if it does it again, it still does a 61. So like the first move that it did was a 61. And then if it does this whole thing again from this high exactly, this is a 61. And it dipped past it a little bit, which is interesting because we look at where we're at right now. This is where we have dipped past it. Take a look. I think this is the last expansion in the triangle. This trend becomes very apparent, and it becomes very difficult to continue expanding. But it's true that now we have an equal sized expansion on both sides. Like, think about it. When we started off, it was in this consolidation up here, and it went out of it by roughly the size of that consolidation, right? Pretty much. And how much did it go out the other side? Pretty much the same distance. And in this case, when we moved beyond that point, that was the first expansion. Then we did another one. It was here, just a little bit steeper. Now this is the third low to the yeah, it's also coming back to test the red yellow line. The last expansion of the triangle for sure. This becomes the red yellow line. And of course there's B points that have been created along the way. It is time for a bit of consolidation before the trend break. Secondary low could be on the table, but we have to watch for more retesting of this line as well. If we do drag any stops above it, they could be knocked out. Now that's the first B point there. Beware of that pullback though. You don't want to drag any stops up there. So it's best to have profit targets at the, the levels that are obviously in need of getting hit, and they can secure whatever trade you do have if you're taking one on the short term. For the break of the new red yellow line, of course. This is where it gets difficult for the people that are in on the short term. And I've seen this difficulty many times. That's why I said anybody that drags their stops above this level, they get wiped out, and that's why they got wiped out. I'm like, what? That's fine. as long as you don't drag your stop above that level. And I mean, I was pretty clear about that. So the initial move there as well, that's meant to get the bulk of them, and it does because they don't. Yeah, some people might have that trend, but I don't think many people much value in it. They should. Now, remember before when we were looking at this triangle, we talked about potentially making whatever spike that we did out of the top equal to what we did on the bottom. Now, if we take a look at like this whole range, what we've managed to do out of the bottom, is it not true? Pretty much doubled it out of the bottom. If I put it on the tip of the triangle, doubled it out of the bottom. Now, isn't it interesting that it decided to just come back for the people to test this and then move on for the break of the trend, the yellow and red one? The one that is supposedly more important, that leads to the green dash targets, one of which has already been hit. The other one looks like it's at the 50 or the midway point, the entire consolidation. Like this is all like how we're testing the 100, or basically trying to pull back on people that have exposure above the 100, in the bigger picture move. Like, cause that big spike down there, who thinks we're doubling that to the upside, huh? I'm like, oh yeah, we are. The whole thing, it might take longer, but who cares? If it takes however long it takes, it's not like it's going to be doing anything else for somebody else. I'm like, that would just be this. So we know that doubling that spike to the upside means this 188, 200. Now my gold bar is at the 161. Generous. Didn't look so generous when we were beneath the red yellow line though last week, because it was very, very much dumping for a lot of people, trying to make them think that, hey, it's bearish. Now remember, all of what was bought up, that exciting bit right from that lowest point. Isn't it interesting that it was only the people that were part of this blast here and part of this blast here that they came for? But anybody that was in from the choppy, hard to be in from area, like maybe iffy area, below the 50% mark of this last move, you could count on the fact that not a lot of people had the integrity to maintain through that environment after having just seen a major pullback. And then we got to see that major pullback again. And I mean, who did it pull back on? The people that were in on this spike right here, they were like, if you cut that spike, you can keep it. Funny about that. Other B points hit. All the green dash lines have been removed. We also decided to come back to the node. The end of the expansion of the triangle. This is subject to being a low that could have a grind as grindy as we had before. We might get, yeah, we might get that actually again. Let's see. And if it leaves sooner, then it's a benefit, I suppose. But the amount of time that it spent there could be used a little bit on the side. After all, many people are just looking at it like it's went sideways the whole day. A lot of people can just like look at a chart like this and just write it off like, oh, it's going sideways. It's like, well, let me. I see how it's responded to every single level. I can see how many spikes that it's made even. Like, did you know that the entire spike that we made again came all the way back to the baseline of the fastest original spike that we had in the morning? And I mean, like, what's really strange about that is you could say that they came back for the people of that consolidation that happened after. So I'm like, where did they allow people of the day to buy and remain in? Well, here at the open, well, here at this dip. And I mean, like, well, this was a spike. This was taking back that spike. And taking back that spike was very fast. You can see it. So it's like I doubt that many people were part of the buying pressure in that area. Especially having just seen that, we've crawled up to a high and then spiked back to it, you know, having made a big spike on the bottom and then a small spike on the top, which is interesting. Everything changed and it started to do this the small spike first and the big spike after at that very point. Now it's funny to see many things change at the same time. Like it is the open. That's a big change, obviously. Well, yeah, into the next move. Like we mhm, mhm. Yeah, exactly. So and the reason why is because of the trends that it draws. Like when we have a spike down and then a consolidation with a spike up, it doesn't even really need the consolidation, but just in general, it might have one. It makes an uptrend, and unless that uptrend is going to remain, it is destined to break in the opposite direction. Now, what's funny about that? They all have broken in the past to get to where we are now, and you could say that more so for the ones that had the spike first at the high and then the spike second at the low, where every time they will make a downtrend. And you can see that this is the channel of both of them. And unless we are going to remain in this downtrend forever, it is designed to break upwards. Because you want to know what's funny about this? If it breaks this line, it's still in a downtrend. It doesn't it doesn't matter if it breaks that line. It's still in a downtrend until this one breaks. And if it never does break, then it's always going to be the trend that it has to break to change things. This trend here is always going to be the trend it has to break to change things. This one here doesn't change the fact that it's in an uptrend if it breaks. So it could carry on through the high, but until this line breaks, it's in an uptrend and that's a fact. And this one here is the case with the downtrend. It is in a downtrend until this line breaks. This one doesn't really matter. That's why it's like the blue line. That's how I'd look at that. Like here we have a spike and a spike, and the downtrend was broken to this point. But the majority of the advancement was taken back. To what though? The 61? It gives me deja vu. Gives me deja vu to this. Which can go down as something that it did decide to do. That's not exactly the same thing, but is this what a 61 could mean? Is the only thing that I said, like the only thing that I'm thinking when I say that. I'm like, well, today a 61 meant that we would get to this. We would expand. And even when I look at the smaller range here, I'm like, well, that 61 right there, that was part of it. So we can see it did 161 here. And then if I drag it up, it did another 61 here.
And you know, when it made a spike past this 61 and it got to the 78, that distance, I'm very interested in that distance. Because you know how good it was at reversing at the 61. Then all of a sudden it makes this spike past it. Don't you find it interesting that that's the spike it chose to make on the other side of the range? This distance right here was the advancement on the high. It's like they knew about that level and they made it an equal sized. Hold on a sec, that's crazy. This is the size of the entire consolidation beforehand as well. And it spiked out of the bottom by roughly this much. And then the top by how much? And then it continued to make that an advancement. And, you know, do we see that anywhere else now? Like, are we using that same kind of node? Like, is that the size of a node? Like this node right here? Do you know, like when we made this first circle, this first consolidation, this is when you could say that the expansion started to happen on this side. You could say that that's where it really started to, you know, expand, right? From that point. So that means that there was a node here, you know, like this right here comes back to that point for the 61 roughly. 15-minute W. I'm liking a short-term W. Like the B point here. Interesting. No, 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 but it happened before. Like, did it not happen here? Like, let's take a look at this for a second. I'll just move this over. Like, this is what it decided to do. Yeah, this isn't a chart. Let me look. This chart. Okay, I kind of turned that one into a one. Okay, there we go. So 15. So like this movement right here, like as strange as that is, it could be considered a W, but like what did we do here? Similar. Like it decided to dump and then make that here.
Huh. What's strange about this is that this one came first here. This one came second here. The relationship between the two was that this one brought us higher. And then we look at this here, we can see that we have this movement, which is the same components as what we have here. It's all 5 waves as well. 1, 2, 3, 4 waves, right? Wait, there's another wave, I'm not. Okay, yeah. This is a 5 wave move right here. Separating this spike and this one. That's what's happening right now. And now we have another one here. 1, 2, 3, 4, and maybe what we have is a 5. Do we have it separated by another spike? That becomes an interesting question. Because you know that, yeah, this process, it's part of an S wave. Like that's what it is doing when it's doing this. Like this is the 5 wave move that comes at the high. This is the beginning point, which is interesting because if I change this just a little bit, it's something everybody's familiar with. Like if I take this move right here and put it on the bottom, like it's like we have a W, and like we have an M. And in this case, it's cut short. It's true that this 5 wave move, it doesn't really come from a W, does it? No, because it's, well, I mean, you could say that this is the W. I mean, we were looking at that, but it looks funny and it's weird. It's true. You know, those are the original ones we were looking at. Um, but when you look at it like a 5 wave move that's separated by two equal sized spikes, it's a lot easier than seeing these W's. It is true that they are the W's, and it does lead into what was, you know, really a crappy M as well. But rather than understanding it that way, see that it made 5 wave move in the middle. The two major consolidations, like this consolidation here, is closer to what other time? This one? You know, I'm like, what other time could it be? And why is it that when it does decide to consolidate for that long, it decides to um, really confine itself to that area? Take a look back at the other chart here. That one I think froze. Now this is crazy. Deciding to make a new high off that 61. Now you want to know what's funny about that 61 though? Is it doesn't have an incredible pullback to it like the last one did. Like this was the first 61 right here in the sequence before. We made this pattern. Oh, sorry. That pattern right here. And that's a pattern that I would suspect is very, very difficult for anyone that's part of any of the upwards movement that's here, because it's like very, very much like a 5 wave move there too. Oh my goodness. I just recognized it's exactly the same thing as what we were looking at on the short or on the long term. Show you. No, it's a fact that we have 1, 2, 3, 4, and 5, right? Is it not true that it starts with a spike? And is it not true that it ends with that same spike? Now let's take a look at this. Is it not the same concept as what we were talking about on the long term? If I change this to red, this triangle sits on the other side of a 5 wave move. The spike that started it ended it. This is one way for it to make an S wave. And it's trying to show us that.
Um, like like it already did one. Yeah, I think it's actually very similar to what it did over on this triangle right here as well. Well, I can't help but remember that the last time that we had a 61, it was part of another 61, right? And this was our five-wave move. It was separated by a spike on either side. So we remember that. So now that we are presented with an entirely new move, and it started with a 61, which ironically is this part completed, and then we've managed to do this part. Do we have another 61 that's also going to lead to a five-wave move that has a spike on both sides, just like we just did? Well, it certainly must be allowed. I tell you one thing: if we drag any kind of stops above the 61s, it could be it could cost you your position. I also think that we could put a VWAP in, like, this has been really common lately. The spikes back to the VWAP like that. I do. Nice. Yeah, it's a good one. Do I have any writing in this? On the short term there. And the M is really sloppy. More than a 61 this time. But it raises the question of this line breaking. Every bit of the excitement taken back again, very far to the low of the node. But why come back when there's not anybody there? We got the VWAP. Yeah, yeah, yeah. Both times, yeah. Now, one thing that I find interesting about the M and the W that you just pointed out there, it was the one we're looking at here, but it's the distance that it played out from that B point to this B point. Then look at the distance from this B point to this one. It's kind of similar. Maybe it's a little bit more, but like that's the size of this spike though. Give or take a little bit more. How much more did it give on this one? And did it give that as well? I don't know. Kind of. A little bit. Up here. rising on W's. I would like to make that into the B point. I'd like to make this into the B point if possible. Because like right now, I think a lot of people are like looking at the fact that it's made a high with a higher high and a lower high. But you want to know what's really interesting about that is it's true that it started off on a push up and then it came down to this low and then it made a new high, but it actually came down to a new low, made the high again equal to the left shoulder, and then down again equal to the left low. So what that means is that we technically have a high with a higher high and a lower high, which is a head and shoulders, and it played out to the neckline where we have a low with a lower low and a higher low. But that's an inverse head and shoulders. And we saw this happen before, and it happened here. Like it was running up, came down, up, up. Oh, sorry. Running up, down, up, came down to this low, and then went up. That's the same sequence as what we have here, which is interesting because like I marked these highs and lows, like this one is a part of the head and shoulders, and this one here is part of the inverse head and shoulders. And if we look at that, we have the inverse head and shoulders here and the head and shoulders here. Like when I look at that as well, like I can see like it had a confinement area that was, expanding and contracting like this. And it came from this movement here and ended with this movement here. And it did that again kind of here in a really weird way. But it's like it took the spike out of the bottom. Like remember when we were talking about a spike out of the bottom and then a consolidation and then a spike out of the top? It always brings an uptrend, right? And that can double down. Remember that. So we had that here. And it kind of took this entire range, which I can draw this, and it doubled it down. Now it's taken this entire method again and presented itself where it's true that the confinement area that it has is very similar to the confinement area that it had before. And it originates with a suspiciously particular move out of the bottom and then has one suspiciously particularly out of the top, which is very much like the one that we had. Why so particular? Is it the work of the public? I'm like, oh, I'll be damned if they're all aware of this and unanimously working together to make sure that it happens. Because it's not really that lucrative to anybody that's part of it. It's smaller movements. If anybody was controlling it, you would think that the people would make it move in the direction that they are trading in, not just keep it chopping in one consolidation sideways. But it's a fact that we have had confinement areas
that have all followed the guidelines of making a head and shoulders to an inverse head and shoulders. And we've also followed the guidelines of making consolidations that are like this, that start with spikes and end with spikes. Just like we were also seeing 1, 2, 3, 4, and 5 start with a spike and end with a spike. Those are two things that I think are really important to today because we keep seeing them everywhere. And this, it's not necessarily important to today yet, but it's important to the current trend because you want to know what's really important about it is when it's finished, it's done, and it can move on to the next thing. But until it's finished, God forbid you prevent it from finishing, right? That wouldn't be very smart, would it? So we wouldn't want to, the first step is understanding what it is doing so that we can analyze to see if we're part of that thing right now. Again, maybe a smaller version or a bigger version. You know what? I can leave this one as like a small schematic as a reminder, and I'll remove this bigger one. Yeah, that's interesting. That makes me that makes me think about key points that have been hit like this before. And then it's like, oh, then we come back and we only hit like this level. I mean, like what makes it the 127 getting back to that 100 initially that makes it feel like it's played out so that it doesn't have to get to it in the future? Because I've noticed that. And I'm like, technically it did come back off the 127 and it's come back to the 127 from the 141 and then from the 161 to the 141 and then from the 188 to the 161. And I'm like, what's up with that? It's kind of kind of strange. And I'm like, I'd love to see it again. Let's see if we can do it again. Let's see if we can go up to this point, 127 to the reversal, 161 to the 127. Or sorry. So what it would look like. Honestly, I'd like to see it with this one, even bigger. The 161 I think is going to have a huge role though, because this is double 161 right here. Got a big 161, a little 161, and it's also my gold bar. And it's like, let's look for more 161s here. Like, what was this? 41? No, it was a 161. What? Interesting. Okay. Maybe a Gartley. But it is a W. The one thing that's alarming about this is if I look at the amount of consolidation that could be considered our average size of consolidation before we like truly advance away from a level that we've been consolidating at. It's taken like this much time, many times. Damn it. Hmm. Take a look. Yeah, yeah. I've thought about drawing the support of the triangle in, but I actually don't want to look at it like it's a triangle because it deters me from understanding the fact that, this is the line that matters. Triangle is an indecisive pattern, and it really puts an equal amount of weight on both sides of the situation. And I think that this is not an equal weighted situation, um, just like the last triangle. But it doesn't mean that every single bit of this triangle won't be taken back after it tries to get up to the yellow zone. And I mean, like I say, it can be very difficult about its method. And then when it does finally achieve the targets, it could take back everything that it did on the exciting part. Like think about it. If it makes a W, like hold on. Let me leave that in there actually. If it takes everything back, right? If I draw this in, that is the W playing out. And what I like about that is it's like it respects the trend. Like it could come back for the retest and just wipe everybody out that's part of this, exciting blasty bit all the way up to the target. And what's funny is the institutions keep their trades, but everybody else that buys into it, they get wiped out on the pullback. And I'm like, yeah, it doesn't have to happen that way. They could end up grinding these highs and making everyone think that it's going to come down and end up going higher. And that's fine. Because this is one way that we make a consolidation and then we pop out of the top of it. Would we be surprised if we did this again? Exactly the same way? Like the same concept that we've been working with lately. So we will see what it decides to do. I'm trying to do that. And I'm like, all right, well, look at what we've done every time we've consolidated in here. Is it not true that this distance out the bottom decided to, you know, formulate out of the top? Was it not already there here and there? And did it not happen here and then here? And I mean, these are undeniably the areas that went sideways the most, right? You could say this one. But how is it treated? Interesting. So what consolidation is there that doesn't have equal size spikes out of either side? And isn't it interesting that those spikes just so happen to be the size of the consolidation? So what do we do when we finish consolidations? Well, we double at the minimum. And when has it been the case that a consolidation hasn't doubled at the minimum? Now, what are we doing right here? What is this? Oh, this is a giant consolidation. What's the value of doubling it? Well, what's the size of this thing? 36 points, not very big. And where did it come from? Did it come from a spike? Is this potentially what could happen out of the other side of the range? It's possible. It looks like it's awfully similar to the size of the range. Was it not true that we were consolidating down here? And what was the end result of it? The double? Interesting. It's not always going to be like this. As soon as the people catch on, it'll change. The people won't. That's the interesting part. You can count on it. The institutions do every day. That's how they make their money. So, and the more that we see it, the likelier it is to be closer to the change, closer to the last time that we will see it again for a long time. Doesn't mean it won't happen again in the future, but people that try to work on retrospect, the people that try to to see how it was so that it can be that way for them again, because they have no idea of why the moves happen. They don't try to anticipate them. They just try to look at the history and see whether or not they can find it doing that same pattern again. And I'm like, well, what about anticipating the need to break lines? What about the need to get to special levels that it's never gotten to before? Like, what about this chart? Remember, this was the final break, and it gives me deja vu to the um, Wyckoff chart that I drew, where it had the I did it on TradingView as an idea, and it came down and it like spiked everyone out, and it was basically the idea that it was going to come back and use this as a medium point and finish by breaking the red yellow lines and getting up to the green dash target levels by the end of it. The value of being exposed to the red yellow line breaks, which there are many of, and they're all pointing down. The idea is they break in the opposite direction every time. That's what they're designed for. And this one was one, you know? And we have levels all the way up here. Like let's look at what how this ended up developing. Ah, it's very interesting to see where it stopped. We take a look at where I would usually make the gray zone between the 34 and the 61 up here. Let's go ahead and take a look at what that gray zone would look like in the future. It's incredible the amount of response that it got to it actually, and the relevance of it, the difficulty that it presented anybody that was part of any of this blasty bit, right? Anybody that didn't see value in buying before the red yellow line breaks, being in through the time that was difficult, and they took back all of that and just allowed the people that were in from before the trend break to stay in. So it's all about finding the value from before it's supposed to happen, not looking at what has happened and expecting it to happen again. That's what all the ordinary people are doing. It clearly doesn't work when there's a high significant amount of change. If you expect it to change on an incredibly regular basis, how is looking at what has happened in the past supposed to help you if we're at such a high rate of change, where it's so likely that we're going to change again and again, and seeing what just happened, even 10 minutes ago might not be the next thing that's going to happen. Like, why was it the case that at the point that we decided it was supposed to end the expansion of the triangle, it decided to? Is it not true that, you know, like we just went over the fact that there was a triangle here? And it is triangulating, but we knew that there's heavy value on breaking through the levels. But anyways, my main point is it stopped doing this expansion and instead started doing this contraction. And now, it's suspiciously particular that we have an even size spike out of both sides of that triangle. And I think that we're going to see it do something new. And you know what that new thing is? Is it's to take this kind of environment that has a spike out of the bottom, spike out of the top, and actually not make it go down, but instead break this line. And it can involve a 61% retracement in between, like a fake out almost, like it's getting the majority of the play out of the last move. Because what people are used to is they're used to seeing this movement right here with this spike right here happen out of the top right here. And look at that destruction. And the fact that it took this line and broke it down. That's what Ryan was going over, I'm pretty sure. And then we took this same kind of consolidation And debatably, we're almost done the same amount of time that it's taken to do this. I mean, like, you want to know what's funny about that? Is through the whole thing, this is what it's done. And I mean, like, well, if that's the case, that the entire time that it's just been making a giant S wave, is this one way for it to make an S wave? And could we see it do this again as a method to just simply make a portion on the top equal to the portion on the bottom? And that's a hell of a way to do it, really. But it is true that the entire process has amounted to it essentially making an equal amount on top that it managed to make on the bottom, and everything, where it begins, sorry, is where it effectively has ended. The entire consolidation pretty much started when this big move broke its trend. Like when we broke this trend right here, it's game over for any kind of movement because everything that it's ever done since the moment that it's ever broken that trend, it's coming back to it. Look at it. Isn't it interesting that if we take a look at this line right here, this red line comes out of this point right here. Notice that from the beginning, it was a spike, another spike, another spike, another spike, another spike, again. So far, everything started and finished at the same line, no? And then look at this one, suspiciously particular. It just ended right there. Isn't that weird? And then it did it again, and again, and again. And what's going on here? Why all of a sudden is it not returning back to the POC? Have things changed that much because we've broken this line? Well, you could say that it's doing something that's different, and you would say that it would be pretty easy for it to do inside of this consolidation. But before, uh, when we were inside of that range, it was capable of pulling back every single time to this red line. Now all of a sudden it's incapable. Well, hopefully it wasn't because of the trend break that obviously just happened. I think it was. So we have to be careful. At the end of the day, it means that that trend brought change. And it's like, for the first time, it's taking longer. And it's easy to see that when something takes longer. It formulated a move away from the red line. And now it's undeniably taking longer to get back to it, proportionately longer as well, significantly. And I mean, what's strange about that is that in not returning to that POC, it is truly denying the red yellow line a retest. And you would think it would be such a simple thing. But instead, what is it doing? It's grinding. And it gives me the vibe of what it did here, where it had like this spike and it was like, yeah, everybody don't mind the bearish divergence that's happening right here. It's like designed to go down off of this huge dip in divergence. And it didn't go down. It didn't go down. And I'm like, well, that's really interesting because I anticipated that it would make a bearish divergence and still not go down. And I'm like, well, now finally we did test. At the end of the day, it's not a big deal that it tested. Obviously, nobody would drag their stops within the path of it testing, but see what else has changed about the return back to the POC. What else is something that has happened every time we've returned from the above? Well, unless we're on to make a spike exactly to a new high, every other time it's tried to make a spike of equal size below the POC. And I can't help but notice that there is a B point that's roughly this distance, maybe a little bit sooner away. Now, that is a B point to a W that may only get hit in the event that we have an M to correspond with the W. And I can't help but notice that when I look at the B point and the construction of it here, well, is it not true that if we made an M of equal proportionate size to that W, this would be an appropriate B point to get to that M. I'm like just throwing that out there. Could be very appropriate, very similar. This portion size here, seen up here, that's an idea. At the end of the day, one thing that I wouldn't obstruct is its ability to get to this level. Sorry, I'll be back in a moment. I just had a couple people drop by. 2 seconds. So we're stepping on the gold zone there. Sorry about that. Back in action. The market waited patiently. Don't you find it interesting that instead of making the spike out of the bottom of the consolidation to get to the B point, that it decided to make yet another advancement away from the B point? And it reminds me of a W that we've done not too long ago by coming back to the B point many times, but not essentially this first time. They missed it, But what I notice is that every time that they've made a retracement since then, it's come back to that high. And that distance that it's retraced seems to be the same distance that it retraced here a moment ago. A third advancement almost. They brought it back to the first advancement. Like it's true that out of these highs that we have here now, 1 high, 2 high, and 3 high, it's come back to the first of the 3. Which is fine. I mean, it likes to do that. After all, could it be making the M to the W, like I said before, when we were down at the bottom, that we could make an M to get there? Now, it's interesting that its reluctancy to get there is really apparent. I can still see that out of this entire consolidation, don't you find it interesting that on the moment of this trend break, this spike was not replicated out of the top? Just this one. Doing this one. I think when we get there, what we do is another one of these. Whoops. Another one of these. End it with this. 5 waves. A little intense. But yeah, this is a fake break. This retest turns into a continuation to the upside, I think. Contrary to popular belief, many people think that the consolidation has developed a negative bearish divergence, and because it's come down, this has made new highs, it's supposed to come down. Hasn't really done that on the RSI though, which is that's one towards it failing. Really, at the end of the day, subtly it will fail. Doesn't have to be harsh about it. They want them to keep trying. And some people will be dragging their stops up ever so slightly. And in the process where we do a W that goes like this, it allows people to just get squeezed by dragging their stops up. And I think that that's what we're trying to do here. And like any kind of advancement that we've ever had, like huge spike up, right, relative to the consolidation, it came back. Consolidation, huge spike up, well, it came back. Now we have a little consolidation here, a huge spike up, and it came back. It's almost like we're rising on ducks in a very, very small short-term environment. So why is it the case that from the break of this red-yellow line that it started to act like that? I mean, that's a change, we could say. Because at what point in this area was it doing that? And can this be found? Oh yeah, it can be. On the other side. Hold on. Yeah, this movement that we've had here, exactly the same actually, but it is a spike nonetheless. It's trying to be. And that gives me deja vu to that pattern that we were seeing in the morning, where it's kind of like a diamond, and it started with a spike and ended with a spike, just like this. Diamond started with a spike, ended with a spike, no? Or here, diamond. Started with a spike, ended with a spike. Like even in here, I'm like this weird little shape down here. This could be considered a movement. Very similar in the sense that it had a spike on one side and had one larger on the other side. And is that not the case with some of these where, the one on the upside is a little bit bigger than the one on the downside? There's a subtle way to advance it. And to this point, it is the case that, like I said a moment ago, that everything since we've ever touched this level has always come back to it. Now, one thing that it's done in this consolidation that I find kind of strange is that it hasn't made it even. It's not been very even about the amount of time that it's spent on both sides. Kind of, I suppose, but not too. Like think about it. Like this area down here versus what have we done up here? And then I look at this area in here. What have we done in here versus what have we done up here? Kind of like backwards in a weird way. Regardless, contrary to popular belief, this is the line I favor in breaking. An easy one to retest, you could say. Now, you want to know what's strange about this? How common is the 61 been today? Super common. It's had an impact in a lot of the major like sequences of the day. Now, okay, I thought that the 61 was going to be a little closer to the B point there, but what it is close to is the point at which it broke the trend. Don't we find it interesting that it has yet to overlap the entire blast that it made from that trend? Why such a long consolidation having never come back on the people from the trend break? I mean, when have we seen that? When have we ever seen it break a trend and not come back for everybody that was part of that trend break? And why all of a sudden on this little trend, long after a consolidation, that makes people wait, wait, and wait? Why would it not come back to the B point? Why would it not take back the spike? And it's like one thing that's changed is that last trend broke, which, I mean, that last trend still is a trend. It's just broken, and we could mark it accordingly. But one thing that would be very interesting to see it create this kind of consolidation, right? Where ironically it begins with expansion, where everything is going outwards, and then it ends with contraction where everything's coming inwards, right? So, and every time that we've seen that, it spikes on both sides. Hmm. Jeez. Another thing? what triangle have we had that hasn't ended up expanding? Now, there's been a few today. Any triangle of this size and confinement parameters is subject to having some sort of expansion. And if you look at what happens when we do a triangle, and I'm like, all right, we do an S wave, let's say, you know, either one flies, whichever one you pick. And I'm like, okay, well, if we do that, either one of them, is it not true in order to get to this high, we have to go like this? And to get to this low, we have to go like that. Now, if we did the other version, check this out. It's the same thing. What's the difference? I mean, does it forget to hit one high? Which one, if so? And does it not cross through the middle the entire time? And I'm like, okay, well, in which sequence does it not start at the tip of the triangle and end at the tip of the triangle? And at what part of the sequence does it not take what it made out of the top and double it out of the bottom? And at what part of the sequence does it not overlap every single person that's part of the original triangle? So it's like it doesn't matter if you're long or short inside of the triangle. How is this move not going to get you out? Or if not, how is this move not going to get you out? Because it overlaps nearly the entire time of the entire span of the triangle. And you could say, well, there's an argument for the people that have caught this little point here and this little point here. They might be safe. You want to know what's interesting about those points? Is there was no sign of it being a triangle. Because at those points, there was no point that it's really triangulated. It had to go from this point to this point and then actually make a support and a resistance to have something to be able to triangulate on. Now, when we see it do that, it's very likely for it to make an even size spike out of the top and the bottom. Which size comes first? It depends on a few other things. But one thing that we can see is that it's interested in taking that movement that it made out of the top and then trying to make it out of the bottom. And it didn't even happen initially too. It was like, oh yeah, everything's fine for all these people here. It looks like it's going on really well. Then all of a sudden it was a quick fake break and then came right back up. It's a very cheeky move right there. That's this move. And I think it hurt more people than it did good for, which is funny to me because at the end of the day, every single person that struggled with that environment, if they had have held through the struggle, they will be fine. But it's too tough for most people. And I'm like, well, yes, most people are inclined to position themselves from the area that it spends the most time. What is the likelihood that, if you were to trade randomly, not looking at the chart, you would end up at the best points? Now look at the best points. How often does it spend there? How much time is it spend there? Or is it more likely that if you were going to trade randomly, you would end up in these areas where it spends the majority of its time? So I'm like, okay. And then you want to know another piece of huge ammunition to back up the fact that nobody trades at the best prices? Look at the volume. And I say nobody as in ordinary people. Those best prices, they go to dark pools, I'm convinced. Because it's not like the market doesn't reverse on volume at the extremes. But the people are so oblivious that they don't understand that their volume doesn't really matter. And they aren't part of the reversals. Clearly, because there's no volume there. So it's like, well, then who is part of it? The dark pools? The institutions? They decide the reversals? Well, it would make a lot of sense. And then you look at the absolute precision that they choose at those points to make them absolute technical levels that are part of sequences that are so symmetrical and particular. I'm like, the work of the public? No way. Now, it's interesting that we managed to pull back this far and not get to the B point. What is up with that? Now, you want to know what's interesting? We talked about sideways and having a pop out of the top and the bottom. What about sideways and having a pop out of the top and the bottom? Does anyone think that that's different? And how so, if so? Because at the end of the day, when we have a consolidation and it pops out of the top first, where do you start your trend line? Well, here it's from the pop out of the top first. Here it's from the pop out of the top first. because the current trend is a downtrend until that one breaks every time. So is it a bullish pattern? What's funny about it is the biggest part about this bullish pattern is a downtrend. Now look at other patterns that are bullish. Is it not true that you buy into the dip? Is it not true on a falling wedge that you buy into the dip? Is it not true on an inverse head and shoulders that the dips are the most profitable points to buy? It's not meant to be thought of as bearish when it's down, contrary to popular belief. Now, this is a head and shoulders expected to fail to the upside miserably. A lot of people are going to get hurt on this one. I can tell the institutions have everyone exactly where they want them. The people that went for this B point as well, they're still waiting for it and they're still stuck. And where's their stop? At the same spot that the people put their stop that short the right shoulder? Think about it. When you short the right shoulder of a head and shoulders, is it not true that the most effective spot to put your stop is probably the head? Because, you're clearly wrong if it gets through it. So you could expect that many people will put their stops at the head or even slightly lower. Now, is it not true that in the event that we cross this point, this pattern has failed 100%? There's no ifs, ands, or buts about the head and shoulders. It's supposed to come off of the right shoulder. Isn't it interesting that it's just waiting for everyone, pausing, letting them short it? Isn't fear supposed to be fast? Get me out now, right? It's falling. It's going so fast I can't even sell it, right? I'm like, where's that? This is suspiciously slow. Dangerously slow. A lot of people don't think that this slowness could lead to the opportunities they will be excited about in the future, but then they will get excited about the wrong thing. And why aren't they excited about the slow? Because that's what leads to this. Interesting. But they get excited when they see the blast that is yet to come. Instead, they aren't excited about the fact that the trend has yet to break, but instead they get excited about when it's breaking, and that doesn't make any sense to me. Because how many times, except for this one time here, have we broken a trend and not come back to it? We've got one time here to mark the change that we're aware of, and that things have changed so much that we can't even come back to retest a trend. And I mean, it's debatable. You could say it came back right here in this red candle and tested it before it left. And I'm like, yeah, I guess it did. It did leave. It is tested. And I'm like, well, it didn't do a very good job, but still. This is a B point that's untested, and what point in this consolidation have we left a B point untested? It was so swift to come back for the people of this W that they were like, wow, W's are working so hard right now, aren't they? They're so good. And then look at this one. Why didn't it work out for the people that just saw one? Very, very interesting that this W played out so swiftly, so quickly, and played out so well, had a nice retracement all the way back in, and this one can't even retrace. Now, instead, it makes a bearish pattern, and it's ready to fail it too. Like I said, when it gets to this point, it's failed. And I'm like, wow, it's really interesting the amount of understanding that you can have on an environment like this. And I mean, like, I can count on the fact that tomorrow will not be anything like this. It will be down to the fact whether or not we can read the analysis or not. It's like, are we afraid to hear the next conversation that happens on your cell phone? No, you know that when you pick up the cell phone, you will be able to understand the information that's being, coming through. Unless you get a call from somebody speaking another language. But what is the odds that that's going to happen? It's not going to happen. And I'm like, okay, well, the odds are you probably don't know exactly what the words are that they're going to use, or they wouldn't have to call you. So they're going to call you and tell you words that you understand so that you comprehend their message. But you don't know exactly what the words are. Now, tomorrow's going to be the same way. I don't know exactly what the moves are going to be, but I can guarantee you that we can comprehend them just like we've comprehended these ones, like we understood the last consolidation, like we understood the last sentence, you know? And it's like they don't call it a language for no reason. It is a language and it's meant to be understood as one. And the moves are a series of smaller moves is meant to be considered and interpreted in a certain way. And it all leads down to I believe that there is a specific way to trade, a specific way to understand the moves. And it's not down to just everybody figuring out their own way unanimously and then becoming, in line with the market. But I'm like, at what point Do we understand that there's only one way the market can be moving, and we're either with it or against it? And it's either we either understand it or we don't. Oh yeah, there's been a lot of that going on lately. Oh, careful with that one. Yeah, that one was known to break. Yeah, Randy really gave that one a good shot. He kept using it, tried to use it more and more and more, and we just kept finding that it was out of line with the market. I used to use it, and it used to be fine. I don't know what happened with them. Yeah, with the A cap, I just go NDQ 100 and then enter, and it goes. And then I type in another one as NASDAQ Nasdaq, and then enter, and that's skilling. I've been using that one a lot. There is another one that's just popped up too that I don't I haven't really been using it much. Um, what is it? Uh, it's a US 100 as well, but it doesn't work if you go US 100 enter. That's capital com. So you go US 100 and then you go down to FP markets. Hmm. Well, that's the thing. I wouldn't draw the same thing on different charts though. Oh, unless you're gonna just use that chart indefinitely. Like, but yeah, the Lambda chart, I would move all your stuff over to another chart and then use that as the chart that you were using because it is different than all the other ones. Yeah, like Pepperstone was known to like freeze as well. I was using them for a long time, but mhm. Well, the one that the freezing wasn't a problem with Wanda. It was like I would draw a trend line, then you would draw it on the same points, and it wouldn't be the same trend line. And I was like, oh, that's weird. Yeah, literally, I'm like, it should be illegal, I think. Like, two people shouldn't be allowed to provide the same information on one index and then have two different prices or different candles. Now, I mean, it's like I don't know. It's crazy. You would think that the Nasdaq, like the company, the Nasdaq, would be responsible for the price, and everyone would have to abide by it. That's probably the way it started. Oh, did it? Interesting. Hmm. Well, I think we're slowly bringing the node up with us here. That's the interesting part about it. Every single time we make an advancement, we're adding a little bit of volume to the top of this node here. I was like, oh, did it finally hit that B point? But then I was like, wait a second, that's not this W. It's a different one that just played out. I mean, like the audacity to play out a W having just failed this one. I mean, like this one's even higher, I suppose. Well, you want to know what this one had going for it? Is that this W was pro getting back to the B point. This one is not, and therefore it struggles. It's an interesting way to look at it because man, if there's a B point that's like, yeah, I'm down to go back to this point that we always go back to, well, good chances are it's gonna work. The other ones that are like telling us to get away from it, they might be a little bit tougher. And you want to know what's funny about this is I'm pretty certain
We were closer to the end of the relationship with this POC, this level, than the beginning of it. I think we've got a few moves left perhaps at it before we're completely done with this level for now. And it's funny too, because whatever move takes us away from this level in a very, very large sense, like it could come all the way up to this point here and then come all the way back before actually being able to break through this level. This movement right here, it does give me a lot of, it reminds me a lot of what moves we were seeing in the morning here. They were part of a 5-wave move. It's suspiciously particular. I don't know. It's a 61, eh? Could it be wave 2? I'm like, well, it's asking a bit much, but I'm like, we did just fail the head and shoulders. How far do they want to make it fail? Like, let's fail it where it really hurts, Like, I think they're going to try and squeeze the crap out of them in a second. But it is true that we made 3 highs and we returned back to the first of the 3. We made 1, 2, and 3, and we came back to the first of the 3. A little bit past it even, which is fine, because how do you make a 3 drives pattern without failing a head and shoulders? Well, you can't. So, like, a head and shoulders can be part of another pattern when it fails. But the 3 drives pattern can't be. So is the 3 drives pattern safer or better? I mean, like, well, that's an interesting way, because it makes you think that it's always going to be better. Like, no, no, it can't be. You can't ever think about anything like that. Always is a tough word, but everybody's just waiting for every always that they can find their hands on, because that's part of their strategy, because it always does something in their strategy. I mean, like, that's where people start to lose their connection with what the market is doing and with what they want it to do. And they always want the market to do their strategy. That's what's interesting. Because what do you do the days that it doesn't want to do your strategy? The days that it wants to go sideways. Well, the least you could the least you could do is try to understand it. I know it might not be in the field or specialty that you have. Like, some people are like, "Oh, long term or short term," and it's like, well, is it not true that the market does both? Long-term moves and short-term consolidations or long-term consolidations that are full of short-term moves. And I'm like, it does those. And I'm like, well, are we just in the dark every time that it's doing it because we don't specialize in it? And how is that an advantage? And I'm like, how much time does it take to learn so that it's not a disadvantage? And I'm like, well, now we're starting to think about something in the right way. you know and a lot of people are like, well, it's not part of my strategy, so I don't do it. It's not part of my specialty, so I don't understand it, is what I'm hearing. That's interesting. Quite interesting. And it's interesting because you could say that my way is a way that you could expect me to be doing something differently every day, unless you can expect the market to be doing the same thing every day. That's the thing. And I expect the market will continuously change at a higher rate than it ever has before. We get week to week changes, day to day changes, and it used to be every month we would get a significant change, but throughout that entire month it was just trying to print out relatively similar patterns with the same results for the people that were a part of them. And I'm like, well, that was like early 2000s and so on, and it was very basic. There wasn't a lot of people that were aware of what was going on, and now they're aware of all that basic stuff, and now it's doing a little bit more complex stuff, and they're trying to push that basic stuff on top of this environment.
And I don't think it works. Like, look, try and use the cheat sheet. Well, the people that tried to use that Head and Shoulders didn't work out very well there, you know. And I'm like, well, a lot of different patterns that are on that cheat sheet are subject to failure when they weren't 10 years ago. And it's like you can read books and they can show you proof that those patterns work. But they worked then. They worked for them then. Those were those times, and these are these times. And that's like, it reminds me of like, you know, somebody can talk about how much, like swords and shields were good back in the day and stuff, and how effective you could be with them and everything like that and everything. But compared to what we have now, it's like it's useless even really, trying to make that your your go-to. I mean, or you would see people out with swords and shields, or at least some of them, but nobody does that. So it's like we've moved on from it. Just like we should move on from the old times in trading. The old times, like they're old times. And I see that everybody's using like what's the word, like non-updated versions of 1930s analysis that does from time to time show itself. But if you expect it to work every time, well then you will learn that always doesn't keep promises. Because I'm like, yeah, we see how many five-wave moves work today. But what is the result of a five-wave move, and how many five-wave moves have different results today? So many of them do. Some of them only come back to the fourth wave. Some of them make inverse head and shoulders. Some of them play out all the way back to the beginning of the first wave. Some of them play out so well. Some of them don't. And some of them have clear four and second waves, and some of them don't. It's like even here, you can even see that it made 1, 2, 3, 4, and 5. And it only ever managed to come back to the fourth wave. Isn't that interesting? Where did we see that before? Is that not part of something that's made up then sideways before? Is the red yellow line in danger of breaking, as strange as it may seem, because it didn't break very well before? But I'll tell you one thing, that we're going to break that line. And it's going to mean all-time high again. So that's the name of the game. It could be quite difficult for the people that are part of the consolidation. It can even make some spikes and wicks out of the bottom, but it doesn't end by anything but breaking that red yellow line. The only red yellow line, that one at the top. And I mean, obviously, then we're going to try and step on that one level to get to the one above it. And it's all about where, like, okay, so do you want to understand how I see the market favor those that are interested in holding for the long term and then trading against those long term positions with hedge trades? Now, I'll tell you one thing, that in a market environment that works like this, there's no better way to trade it than to be in from the first trend break from the bottom and to hold it the entire way up, focusing on trading against it while you're waiting to benefit off of this that's eventually going to go up then sideways. Eventually, it's going to make a five-wave move that's going to go up like we've got right now, and it's only going to come back to the fourth wave, and it's going to look like a giant sideways consolidation. What's it going to do? Push out another one, contrary to popular belief, because this will hurt momentum and it will go down. The sideways movement will hurt momentum, just like it's doing now. We've been going sideways for a prolonged period of time. It's nearly had so much time in that consolidation that it's had time to recover. But undoubtedly, since the point that we started this consolidation here, you know, we've been declining across the board on momentum. You can see that from that point right there, where the price has been going up. Where did we see it go up? here. Never. So I'm like, well, this is the closest we've been to the B point down below. We do have a new trend. I'm attracted to its break. Of course, it cannot get to the red yellow line without having broken this one. So it's going to have to be something that we're most likely going to have to deal with, the break of that trend. And I mean, like, suspiciously particular to this one. Yeah, you want to know what's weird about that one? Is I remembered clicking on this one twice. Once here, and then once here. And I find that it's very strange that I find myself clicking same levels again. And it formed the trend that otherwise broke with impact. Will it do the same now? Probably. Contrary to popular belief, because I don't think that there's a popular opinion about it, because people aren't even looking for that to be something that they're interested in. It's not even something that I've looked at before and been interested in, but it's something I'm interested in now. Like, I have the ability to create the situation. It's not that I have had to see this before, it's that it needs to happen now. It's not about like my strategy. Like I said, this is my strategy. It's about anticipating the need for something, the need for the moves that are about to happen. It's not about repeating previous points. It's about understanding why the trend broke, why it broke with force, you know, with impact. Like somebody broke it. Let's see what they do with the yellow line. At the end of the day, it will only break when the people give up. They're waiting for the people to give up. The people don't realize they're having a game played against them, right? So they it's easy for them to give up. They just think, it's doing this forever. Now this means if it does this forever, people on Wall Street don't make any more money. They only make money when it moves. And if you think that this is what they're interested in doing for a prolonged period of time, I don't think so. I don't think they're interested in not making money. So you can count on the fact that, we're going to get some more movements. And like I said at the beginning of the consolidation, what is the most likely thing to happen when we end it? Well, to end the consolidation with doubling it. The people are still hovering around this middle area. Very curious about this though too, because I'm like, all right, like let's go to this untainted chart here. Oh, see? What's up with that? That's not what it looks like. Okay. Guess you can't use them then. See, like why would some of these things are just I feel like they add them in here just to create more things for people to look at so that they're diverted from the things that are actually important. I mean, like if you give somebody so many options, so many different routes to go down, don't be surprised if they're confused, right? Like, what indicator do you pick? Those are just my favorites. Those are the ones that they provide. These are the ones that the community provides. Oh, those are just the editor's picks. How many indicators can we pick? Okay, what I was going to show is actually this. This is our consolidation here. The bulk of it. How even has it been? Has it been expanding? Last time we saw this, it was from contraction to expansion. Now it fails to expand again? Wow. Interesting. This line. Place it on top just like we have the other one. Just so we don't get it twisted. But at the end of the day, one thing that I find intriguing about this is we have a consolidation up here that has a heavy node. We've used this node early in the day as well. And it was interested in making things pretty even around it. Pretty freaking even. And then we go down. Where's our equality? From something that was able to be so even, something that's given people such a hard time about it being even. So interesting that it wants to be even now. Do we think that the people that are aware of it being even here know about this move? Do you think they're interested in putting it on top? Oh shoot, I just realized that this could be one of those triangles. Or not a triangle necessarily, but a diamond. We were looking at this earlier, because it was how we were dividing other areas. You know, they had spikes on either side. Curious about that. But if there's one thing that has been clear about today, it is that every move begins and ends in the gold bar. And right now we're putting that to the test. And it's like, what is the argument to that it is ended until it leaves one of these barriers? Could we really say that it is out of the consolidation until it exits those lines? And if so, how so? What could it do in here that could make it so that it's not confined between those barriers? Or is the only thing that it can do to get out of this consolidation break these barriers? Which, you know, that's a fact. I mean, we cannot leave this consolidation without breaking these barriers. Now, just because we break one side of a triangle first, does that mean that that's the last? Remember how we do it. When we break a triangle, does it not do this? So, which side of the triangle broke first? The upside? Now, what happens if the downside breaks first? Is that the last one to break? Doesn't necessarily have to be. Also, another thing that I find very suspicious is the 61% retracement again. Like, what's up with the 61% retracement? Because it reminds me of what it did in here. Because this was a 61, and then this was a 61. What's interesting about this is this one was not a 61, but this one was. And I'm like, okay, if this one wasn't this move here, yeah, it's a little different actually. I do believe the same result will be the case that we break through the high of it, but I mean, like, it's very interesting the depths of which it's willing to go to make sure that everybody that bought at the point that literally, like on my other chart, check this out, point that the trend broke, right? Like, did I not mention the people of the trend break? And I mean, like, for what it came down, if it didn't come all the way, then it's splitting hairs. I don't really care, honestly, because nobody should be buying above the B points anyways. But they are all cleared now. Not a single green dash line remains untested. And boy, was it ever a problem for so many people to get this one. Like, think about it. Let's just go through their experiences real quick so we don't ever have to, have them be a surprise or something. Because it's true. Like, look at it. What did we do? We came off the 141 to the 127, the 161 to the 127, the 188 to the 127, the 227 almost to the 127, and then with much grind, it finally got to the 100, the B point. After the longest consolidation of the day. And it's like, it's a consolidation that happened within another one, which is fine. But the only other time we've seen something take that long is when it decided to make the expanding triangle into a bow tie. And I mean, it doesn't look pretty there. It was a little bit like that. But I mean, the bow tie is supposed to look like that, right? And it's a little bit off. And I'm like, whatever, doesn't matter. At the end of the day, it is very much contraction into expansion, and that's the confines of a bow tie. Name it the bow tie because it's something that represents what it's doing. This is not part of it though, FYI. It could be though. Would I have a problem with it making a little consolidation between the two? I don't have a problem with that. And I'm sure it's happened before. I'm sure it's happened before. And then I'm like, okay, so the distances that we've been seeing, contraction into expansion, that's all dandy. But look at what it fits in the middle while it's doing it. It's expansion into contraction, and equality on both sides. So this is the way that it chose to consolidate sometimes. Instead of doing the expansion into contraction, debatably, I don't know. This is not okay. So if it's not contracting, maybe it's still expanding. That's an interesting thought process on that. Because there's no evidence of it contracting here. There's no evidence of it making this here, like on a bigger scale. There's only evidence of the first part. We haven't had any evidence to see this yet, the triangulation part. And you want to know what would do that? Is if we did anything but make a new high. And that's like, wow, really? So if we do anything but make a new high, it's contracting. Well, because how is it expanding if it doesn't make a new high anymore? It has to expand in order to keep, or it has to break the high in order to keep the expansion. And I'm like, well, let's say for instance, oh, God forbid it had a negative response and it decides to make contraction and it decides to make the expansion, whoops, turn into contraction. Let's say it did that. Well, remember what happens every other time that we do this. We take this spike and put it here. Now remember what happened before. This spike. I'm like, that spike, really? Okay, well that's a spike, alright. We could put that on top? Oh, that would be suspiciously particular because it would expand the triangle again. Interesting. Oh my goodness, that lining up with that high right there, doubling the triangle, that, I like that. There's a lot of things lining up here, so. And you can count on the fact that the public hasn't calculated it. You can count on it. Like, why is it going to work out for me? Well, it seems like it's too out there to be something that it could be considered important, maybe? Well, let's see. The consolidation is subject to ending within the next 10 minutes, probably 5. Probably 3, but soon. And how does it end? But you want to know how it would really end. What would be really interesting to me? Is if it took this spike, but not only put it out of the top, but didn't stop. Because you want to know what this consolidation's been really good at? It's been really good at making a spike and then making another one. But you want to know what it always does? Is it always comes back to this middle point. I'll tell you one thing. We're closer to it not coming back. And instead just grinding and going up again. Contrary to popular belief, because every spike's baseline lands on the golden bar. And that's about to change. But it's only become the most obvious thing that it's been doing. Like everybody can see that, everything comes back to the gold bar of today. I'm like, okay, well, it's not really a gold bar. I should make it like blue, neutral. It's the middle. It's not somewhere you want to be in from. It's the worst place to be in from. Think about it. At what point has it ever been the best price? And what point was that best price ever allowed to remain the best price for more than half an hour before they were all made into losers? Doesn't matter if you were long or short from the blue bar. It's always come back for you. So I'm like, that's the tough part about that. I mean, like the people of that blue bar have never been selling high or buying low, unless you could say that they were selling high here. I'll cut these people a break. But other than that, it's tough. It's tough. Doesn't mean that there hasn't been calculated areas that it's designed to come down from, but the end of the day, the name of the game is to keep exposure to this level after we step on this. Like how much of a step do we need there? And oh, what if it forgets to step on it? Well, price it will be held to pay for that. We'll be back stepping on it regardless. If it blows 100 points through this level, we come back to it. Just like I said about the other one the other day. And I mean, 100 points is a lot today. Ironically, it would like triple this range. Oh yeah, but the thing is though, is like this grind right here, it could be like this crappy grind right here, where it's like, oh yeah, you didn't find value in the crappy low ATR, and it's like then it's like boom, and it only comes back to these people, and everybody in this crappy environment here is ironically going to be safer than they think. As tough as it seemed to get exposure to the end of it, it's like wow, what a show for the people that have just been holding, right? I mean, like look at everybody else continuously try to get exposure to something that everyone should already be in on because it was clear that we're going to get to this level. And today it's been a day of high interest to me. I'm very, very interested in this day and how it has played out, and how you could suspect that the majority of the public did not play a vital role into today, but it effectively makes it difficult for the people that are ready to rock after the holidays, and they have to employ patience, right? Or else they've been settling for less. And I mean, you can tell that today's not a day where the hedge funds are interested in making bank off the hedges. They're interested in making everybody else short it so that they can put their stop in the same spot. At the spot where the institutions don't want to buy. Because there's a couple reasons. The first reason, the best reason, is that it is the worst spot to buy. It is the highest spot that it has ever been, and it's a terrible spot to buy. Second reason is if they've already bought it, if they want to advance their position, they could get dinged for market manipulation if they buy on the move that is going through the high. They could say that they were part of the fueling of that move that otherwise benefited assets that were already acquired, which is kind of illegal if you do that, intentionally. But it's hard to say, oh, yeah, my order moved the market and I knew it was going to. So it's like they still do it. Everyday market manipulation is a crime that's committed, I guess you could say. And I'll tell you, this is not the work of the public making it this precise. So it's got to be somebody with intention. I'm like, well, there's no way that Wall Street was built on luck, but intention. It's true that we continue to retest the blue bar. Now, the blue bar was, I think this is one of the last few times that we're going to be interested in testing it before we start to make things even. What we did out of the bottom of this range is subject to happening on the top, if not more. And it's showing everybody that, hey, yes, we come back to this level. We come back to this level so much. And it is one of the last few times that we will come back to this level. Another thing that's intriguing to me, I mean, like, look at all of the advancements that have been responsible for breaking trends and continuing us to new highs. Have they not been off of bounces from the view app? Why was it the case that this one didn't even make it to the view app? Has the red zone been created into such a support level that's so strong that not only is it not acting as a resistance level, it's now a support. I mean, like when I see that, it's like it reminds me of that they've conquered it literally. Like they were like, oh, you think this is a resistance level? We'll show you. Turn it into a support level, and now it's a green zone. I'm like, wow, because it's true. In what way, shape, and form is this working as a red zone right now? Now I leave it as a red zone because I know that it was originally a red zone. Now the fact that we're on top of it makes it a support. Now I know that it was a red zone that otherwise worked as a resistance in the past. Sometimes it has a green zone as well. But in this case, both of these levels, they were used as resistance levels to come down. The first initial jab at the high here was a huge negative response to this first red zone. So it made its imprint very clear that it was interested. Like, look at that move. It went all the way down to there off of that first red zone. Then it came all the way back up and decided that it would make this giant move all the way back off of the next red zone. Now all of a sudden, it has no interest in moving down off of either of them, and it's standing on both of them. Like it has conquered them, and now effectively the long traders own those levels. They own them, and they don't have to worry about buying them again because they've already bought through them, and that's a fact. So it's that area has been controlled. One way you can look at it, like they have controlled the assets through that area, like well, and it's like they've gotten the people out of the way, they've moved the assets forward, and I think that they're interested in actually putting a small order in that's going to have a large impact. You can see that the candles are starting to move a little bit differently. Like this is how they managed to retest that trend. And look at how much it fluttered on the top to how much it fluttered on the bottom. This is how they designed it to work. And I'm like, well, this is a characteristic that they deemed necessary for this environment, and it's a fact that it was that way. So could we see it again? Of course, well. But like I said, we're interested in leaving the consolidation and being done with this whole node here. So anticipating that it's going to continue to be part of this node is dangerous now. Just be aware of that. Obviously, everybody that has ever been exposed to any red yellow line or any trend line that I've literally put in today is at a profit. And you should be very, very careful about where you drag your stops. Like dragging your stops above the blue bar is still not a good idea. Even though it's towards the end of its relationship with it, it's not a good idea to drag your stop above it. Um, when I look at this 200 and 188 here, I'm like, okay, for what it did give them, it gave them minimal here. Like how much was that? 10 points or something? Yeah, 10 points. And then it comes up and it tries to use it again. It's like, all right, well, maybe give you 12. Then we come up again and it's like, all right, well, undeniably, the first people that tried the 188 had to endure a loss. The second people had to endure a loss. The third people ironically, aren't even at the 188 anymore. It's blown right through it, and they have to bet that it's going to work. That's what the market decided. I'm like, well, if they did, then they were right. I mean, and that's what's stupid about that environment. It's clearly a trap for the people that were targeting this level. And yeah, sure, it gave it to them, but it's not like it didn't just take it back again. I mean, like, wow, after all that, it gave them this, and then decided that it should be taken back. That's tough. And every day, I think that we're going to get these tough environments where it's like the short traders effectively are trying to get positioned for the next major decline, yet it's continuously tough. And it was like this on the daily lows. When we look at the daily lows, we can see that it was continuously tough for anyone that got exposure to this trend break. And it's like you knew about that trend break as soon as it was made here. So that entire time down here was all about, getting exposure to that trend break so we could see it not only double but break every trend that there was on there. And now the same thing maybe beginning at the highs where we grind slowly and slowly and slowly. Anybody that's initially bearish or initially really aggressive for the reversal just gets absolutely pounded for a prolonged period of time while the momentum develops on the long term. And that's the way. So if we take a look at other triangle here, here. We've managed to spike out of the top of the triangle with much space left in the triangle. Ironically, this is a triangle that ends exactly at the close. The volatility has undeniably increased. There is an M that compensates the W. The B points that have been, this gives me deja vu with this fact that we took this trend break and took it all the way back to the area that was otherwise slow. And it's true that we have a B point right up in here. And it's true that it comes with fibs. We are currently at the 161 where it's played a vital role today. And all of those things. Wow, there's one more thing here. So early in the day, we saw that it was capable of making a head and shoulders to an inverse head and shoulders. Now, this part is missing. I noticed that that's the distance that it made the head out of the bottom. That's strange to me that it would decide to do that. Because not making this high means there was no head and shoulders. There's only an inverse. And we can see that here, where there is in fact a low with a lower low and a higher low. Positioned badly, sure, but it is the case that it is a low with a lower low and a higher low. And I do see it getting back to the B point, but that's not much of a move. This trend line, it has broken pretty atrociously, and I think that it's actually worth a lot. Let's take a look at it. We're going to double this entire range when we're done with it. The little crappy B point did get hit. That's fine. Um, Honestly, these levels here, they're nothing but minor obstructions, I find. Nothing but minor obstruction. I'm under the impression that there is actively a team working on trying to get this consolidation to end now, and you have to bear with them, basically. What's interesting about this is that on the other chart that the triangle has a tip that ends at the close. It's not the first time we've seen that. The imbalance could be the tip of the triangle too. And I mean, like, you want to know what's nuts about that? Is try and, with the paint tool even, draw like a triangle where the tip ends at the close. And see how hard it is to make the exact lines connect until the exact close. And it's like the amount of mathematical precision that goes into it being at the close, and even if it's to happen 50 times in 1 year, or 50 times in 3 years even, you could say that it happens. And if it happens that regularly, which I would say, 50 times in the past 3 years is pretty reasonable. And roughly, and we've seen it happen that much, then we should start to understand it's something that can happen. So we should watch for it. Not something that happens so frequently that we could expect many people to understand it and wait for it, but something that we could expect them to be doing is to be waiting for it to come back to this blue bar. Something that it has been interested in doing for a prolonged period of time. Something that is coming to an end. Or else we're destined to stay at this consolidation bar forever or for a long time. And I'm like, I just don't see that. I see that the volatility is increasing. I see that they're trying to take more control than they had before. I can see that they're moving it with absolute, you know, conviction. It's not chopping with crap. They're not just waiting like they've got their fishing line in the net in the pond, waiting to see how many fish are going to bite. Because it goes through that process before it gets into this clarity environment, before people have been eliminated enough so that they can move the market with ease. And like I said, if they use a certain size order at the beginning of the day, and it's like, oh yeah, because there's a lot of people there, they can use that order, and it doesn't really move the market. If they make the market move in very small ways to eliminate all the people, and then use the same size order, don't be surprised if it has twice the impact, because nobody's stepping in the way of that money like they were in the morning when they were here. So, and it's another argument towards, if they're manipulating the market, they could say, "Hey, I'm not using any more size now than I was earlier. What do you mean?" But except they know that there's less people there. That makes it legal. It's not illegal to stop people out intentionally. It's illegal to move the market. It's not illegal to set up a particular level that basically has everybody inclined on putting their stop at the same spot. I mean, it doesn't matter where you're shorting in this entire range. A lot of people will be putting their stops where. And is that not the spot where you would assume the long traders don't want to buy? How do we get through that spot? Well, we convince all the short traders to short below that area and put their stops in that area, no matter if it's on this dump or this dump or this dump or this dump or this dump. But they all are likely to be putting their stops at the high, lumped together in one big area with no volume. Let's take a look at what happens to the volume when we pass this area. And if you see a little node grow, well, it's all these people getting stopped out. And you see everybody buying at the high. all the other people are convinced that people are actually finding value at this point, when little do they know their friends are just getting stopped out. And that's the buying pressure. People that actually sold here, trying to buy lower, end up putting their stops, which are also buy orders, at the high, and all clumped together in a little happy node. Well, actually, it's not so happy, but it is the case. It's called a squeeze. And there's many ways to squeeze people, and this is a slow burn where they have people waiting and hoping for a prolonged period of time for something that's not going to happen. And of course, those that are holding, are interested in finding hedges for the moves that we've seen here today. And basically, the ideal hedge spot is the gold bar on the very, very high, but it depends on how we get to it. And it doesn't mean that there isn't hedge opportunities until then. And what is a hedge then? Well, it's a short term trade made against your long term one. And you expect it to get stopped out by the end of it so that your long term one continues higher. That's what you need. That's the best way to be positioned. And it's like if you're not positioned with anything, well, the best way to aspire to being positioned is so that you can get that to be the situation for yourself. That you can get it so that you're long and you're safe. And now you're focused on trying to catch the highs. And every single high that you do catch is a bonus while you're waiting for that long trade to develop in perpetuity. With the rest of the institutions that also choose to hold their assets and benefit off of the gains of those companies in perpetuity and own them in perpetuity. So it's like, and in that process, they are either seizing control, maintaining control, or obtaining, or no, managing or dealing with it. So you're either managing what you have controlled, obtaining what you've controlled, or making sure that what you have isn't going to be taken from you. So retaining it. And it's huge because the only way that you can retain that control is by keeping on it, staying in control, you know. And that means that this consolidation has to be really interesting to the person that has the most money invested into the market. There's no way that every single movement isn't absolutely important for them. So, and they are holding for the long term, and they're interested in starting short-term positions, hedges against those long-term holdings. Those long-term holdings, you could consider it the fund. The short terms, the hedges against the fund, hedging the fund. That's an obvious way to look at it. Way that I've come to the conclusion that, you know, that is the way the market it tailors to people that are trading that way. And I'm like, well, there's no better way to do it than to be exposed to infinite upside potential, guaranteed to be profitable on every single upwards movement it ever makes from now on out, and then focus on every dip that it can make as well. So if you can capture all of the dips that it does make while you're benefiting off of every upwards move that it ever has to make again, that means that unlike the individual that has to worry about whether or not it's going to come up or down tomorrow, they have to think about both directions. The institutions just have to think about one, when their assets are going to come down. And how do they protect against that? We'll trade highly leveraged derivatives like futures contracts against their overall positioning of, the fact that they've got shares across the broad spectrum of the entire market. It's like they're hedging the market because they have interest in some of the biggest companies that have the most impact in the market anyways. Trading futures against that overall portfolio is really easy. And you just keep that overall portfolio exposed to the market on the upside, really illiquid, can't sell it. If you sold it, the market would crash, you'd lose 30% instantly. That's like your last 2 years of holding potentially. And I'm like, well, why would you give it up then? Why don't you want the control? And I mean, like, to be doing that is to be on their team. because it's not like they don't benefit by those companies continuing to grow in the price in perpetuity. It's just one thing that's interesting about the fund that's not with the person is when the people at the fund die, those positions don't get sold. Now, when the individual dies, they tend to, and they don't get to continue benefiting the people that worked so hard to get those assets where they are. The person that inherits them typically just sells them and thinks that it's extra money. So, because they don't understand. But how easy it could be to manage that if you knew. I'm like, oh, geez. And it's like the value of being part of a team is it's very, very, very high. I think there's a lot of teams out there that are just I wonder why they are where they are. And there's a high recycle rate of those teams, just like there is the individuals as well. I think that, like I said before, the 80% of all the hedge funds out there aren't as profitable and as big as the 20% that actually matter. And there's going to be more information on the 80% than there is the 20%, 100%. And the attention of the public will be diverted to the 80% that does not matter almost certainly, and people will just eat it right up. Me, I will not accept any kind of information from the hedge funds at all. I see their moves right here, right now, and this is as good as it gets. To see the targets, to see their intentions, to see the fact that we are interested in leaving this consolidation. We are interested in getting to every target I put up there. And we are interested in stopping everybody out exactly as I mentioned. And if you drag your stops above any single level that I did mention, you will get stopped out, and you have been stopped out if you did drag your stop above the blue line or any other red yellow line or inside of the node or around any triangle that I've mentioned before or anything like that. Like if I had to repeat this entire day again, it would be a waste of my time to say anything different. That's the truth of it. Doesn't mean it's easy though. I've had to think a lot. I'm going to pass out at the close because I've had to think so much. It's like an exam every single day. It's like I'm writing SATs. That's what it reminds me of. I come out of there and it's like you're kind of wired, after you've written an exam and you're like, your mind's running like a million miles an hour because you've been using it. And the more and more that you understand of the market, the more and more it will have you thinking about what it is doing. And the less and less you will neglect the moves that it does make. And the more and more you will understand them, and more you'll see value in even the slowest and longest consolidations. Because that's what it takes. And then I start typing, that's what it takes in the chat. Deja vu. But it's not like I've not had anything to think about the entire time. Very much a process of learning about what it is doing and adapting to how it is changing and to understanding the need for it to change in the first place. And you want to know what's funny? Is every single thing that it's done today has been contained within the plan of the last session. There was even this one. See with the final trend break. Oh, that was on a different chart. Get that chart. was in here. The red yellow lines are something to consider. We are really far away from them and could have many traps until we meet them. Watch for a move to the green bar on the break of the first red yellow. And on the first red yellow, it broke exactly to the green bar. And I even wrote in there, I was like, the green can lead down to the gold, exactly. And that was the idea, is like, it literally came up to hit the green and it came back down to where? The gold. Like it was listening. Like the red yellow line exactly did break it to the green and then it brought it down to the gold. Exactly like it. Be forgotten. Between me and God. That's what it is. Now again, on this chart, another another duck. What's interesting about this green bar is if we don't break out to it, we break out through it, and it's doing a terrible job of breaking out to it, so I'm curious. Maybe after a retest again of the red yellow, do we try to break out to it? But how many times have we made two spikes on top of the blue bar without having made a corresponding spike underneath it as equal size as the ones that we've made above it? At what point did we manage to make two spikes without making that distance beneath? Like I can see here, when we made these two spikes, like it totally made that distance beneath the two. And it was totally interested in making that distance. And now I look at this and I'm like, well, is it not strange that we started with this move on the bottom and it felt the need to double it to the upside and now it can't to the downside? Why not? Interesting. What's wrong with it? It's higher, should be able to do it easier, no? It came from a W. It should be able to make an M. No? Why such a struggle? I guess it already did make an M. And that already made another W. Jeez, I didn't even notice that. But yeah, no, it did. And effectively, this has been in a sequence of M's and W's every single time that it's been moving on. Is it not true that they're all getting smaller, converging into a tip? Where at this tip, we could say that this comes to an end at the tip, where M's and W's may not actually matter for a moment. And we go into something else, we do something else. Because the M's and the W's have undeniably been a way of this blue bar. And I mean, what if we leave the consolidation like we entered it? And I mean, how hard is that to believe? I'll tell you one thing about the consolidations of today. Is it not true that earlier on in the day, when we looked at the consolidations here, we can see that this consolidation, it had a spike out of the bottom, right? And the top. And then this consolidation here had a spike on the bottom, then the top. This one here had a spike on the bottom and then the top. It was really good about it, right? They're all really good about making it really even, right? And then we can also see that there's other kinds of consolidations, like the ones that we had that were spiky like this. And they came from a spike on the bottom and they left on the spike on the top. And we know that one, right? But is it not true that it's still even, right? So what happens when we stop being even? What happens when we deny this move, which is otherwise so normal, from coming out of the bottom? What are the odds we make a new high before making this even? And it's like, where the hell did that come from? When do we make a new high without making it even? In what consolidation? And it's like, when you can find yourself saying, where did that come from? Things must be changing, right? And, well, God forbid it was because of this red yellow line. We remember how much things changed on the break of the last one. Created this giant consolidation where the 5 wave move only came down to the fourth wave. I remember that. That 5 wave move only came down to the fourth wave, give or take. A little bit of a spike past when it was finished. So, and it's like, I find that it's human nature to like look at what I'm showing and to try and make it part of a strategy that you can use always. And that will hurt you 100%. What you should understand is this is a way that you can look at it with an open mind, understanding that this wasn't the way that we traded last week or last month or last year, but it's the way that this wants to be understood. Because every single fact of this consolidation, I'd like to think we've went over. Every single high, every single spike that's managed out of every single consolidation, every single trend break that there's been that's mattered, that's changed things. Every single change that there ever has been, we've analyzed it, we've understood it, we've seen the need for it, and it's all been part of the process to step on this to get to this. For anybody that doesn't understand the chart, this is exactly the English language, and I understand. And I'm like, how do you get that twisted? You can't get that twisted. You can't. To step on this to get to this level, that's like very, very, very basic. So we understand that the name of the game. If you don't know the legend, I can put it up here for a second. The the red, yellow lines and so on, and what they mean, and everything like that. But if you've seen any other stream or video, you'll know like the yellow lines. They break with an impact, typical trend change, just looking for a typical trend change. But then you've got the red, yellow lines, which are like even more impactful, greater force, more intention. And then we've got the blue lines, which are abstract lines. None of them going on today, really. Um, and then we've got the green dash lines, which are often targets. Every single one of which has been removed today, and I can't remember how many. Maybe a dozen. Previously hit price targets that are of interest are blue, and gold levels are high importance. I like to make sure that they stand out as gold. Like, the 61 is a golden ratio, so I made that gold, and I wanted that same importance to translate over to other important things. So I made them gold too. Obviously, the red zone is a resistance area, the green zone is a support area, and the middle area is a neutral purple or blue sometimes. There's no better way to do it than this way. To understand it the way that I see it and the way that we have seen it today, there's no better way to understand it than the way that we can see it's supposed to break every line in sequence. It's supposed to be difficult. It's supposed to come back on every single person that finds value late. You know, we have to allow for every single trend to retest. And if you followed every single rule that I've stated, I'm absolutely proud of every single thing I've said today. So yeah, it's been a constant process of working towards the target that we don't have to stop at. By no means do I intend on selling at this level at all, in fact. But I know by that level things have changed. And I know by that level anybody that's exposed to it getting there will have made it through this. And that says a lot. And I suspect that the market will move differently for the people that have made it through this. And it will move differently for the people that get out of it than rather basically if you look at how it moved for the people that found value in this consolidation, that way of trading is going to come to an end. And the expectations that people have learned to have inside of this environment are all coming to an end. As we see new things that might be similar to old, sure, they don't have to be, but they can be. And there's one thing about every consolidation of today that it hasn't forgotten to do. It's made it even and it's doubled it. Both of those things have happened on every single consolidation of today. Because what consolidation have we had today that hasn't managed to double up to get to where we are now? From this one, from this one, from this one. Which one are we looking at that hasn't doubled to get to where we are now? Will it always be like that? No, but it's like that in this environment. Because I fear that somebody's like, well, I'll always assume it's going to double then. If we know it's always going to double, now it's easy for me because I know it's always going to double and it's part of my strategy. I'm like, oh no. No, 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 no. It's not that simple. But I'm like, that's the human go to. That's like, oh my god, I found something. The 61 works this much. Well, it's part of my strategy now. It's like that's dangerous. Because God forbid the market environment changes and you're not familiar with it, or your strategy doesn't fit in line with it. Well, maybe you need a new strategy for that new environment. And if you're not subject to understanding how the environments can change into new environments, well, lessons can be learned the hard way. It's not always the worst way, but it's unnecessary when they could be learned other ways. And it's funny too because when I talk to somebody that's learned a lesson like that the hard way, they'll talk to me like it was like a no-brainer to be able to see it, and I'm like, well, it's so hard to convince the person that hasn't seen the true suffering of not seeing it correctly. But I'm like, man, you ever talk to somebody that has been through that pain and suffering before? They're not even going to be on the fence about it. They won't be like, oh, maybe it's going to work, maybe it's not going to work. They'll be very like offended by even the idea of trying it. It's just they know how well it's going to fail essentially. And what's funny about that is there's some things that you can find that have worked hundreds of times decades ago, but that does not mean that it will work now. But you can find people explaining them with exact, absolute conviction that this is the way a pattern should be traded. In 2023, we'll chew that up and spit it out so quick. I'm like, it's crazy. Absolutely crazy. And I'm like, as long as we know that, well, it's not a danger to us anymore, right? I'm like, okay, fine. If it's like that, then we work with it. I don't make the rules. I have to live with them just like everybody else that understands them. It's interesting. Now, putting a node here on this gold bar could be acceptable. It's not the end of the world. Having something to step on is okay. Now, how much? Yeah, yeah, I don't know. I don't think it's going to be too much. I don't want it to be too much, to be honest, because there is a huge node here. I'm like, what are they? Can they not just step on top of the big node? I'm like, that should be fine. I think they can. I think they will. So, and technically that's what they're doing right now. If you take a look at what it's doing right here, if I move this over, like it's just missed this little gap here basically. For what it's traded up here, that is the volume that we have here. So for that little amount of consolidation, maybe if we doubled it or tripled it, we could make this node a little bigger and it would just look like it's kind of rounded off a little bit. Wouldn't look like it's kind of got this drop off here anymore if we spent twice as much time there. But is it really necessary? I'm like, with most of the people having been gone, it takes a lot of discipline to sit through a slow day after a holiday where everybody's been comfortable and relaxing and now they have to be patient. A lot of people can't do that. So I look at it like, oh my goodness, I'm like, I can do that. I'm like, geez, it's like such an advantage. Like imagine if 80% of the rest of the market folded under the pressure of the sideways movement, how much easier it would be to move the market. And you want to know who knows that? Institutions. Why they make it go sideways and why they make it go so precise at the end of the day. Like nobody's there to obstruct that precision. And I'm like, well, this will change when all the people start waking up at the end of the day because they want to try and snipe that point of the day because they want to get out quick and be geniuses about it. No, 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 no. Count on the fact the institutions will be there 6 a.m. to 5 p.m. every day, as it will be when I'm managing my team because the assets don't sleep. And the problems in the world can happen at any given moment. It's either we're ready or we're not. We're either watching or neglecting. But you can count on the fact that the people that make these moves happen have somebody watching all of the time. And they have the ability to get everybody in at a moment's notice or without a question. The entire office would be there at a blink of an eye because that is what they do. It wouldn't be the best if they didn't. So, but I know. Because I don't think negligence is part of their playbook, but control. Negligence and control don't go together very well. I mean, if you're negligent, you the control that you do have, I wouldn't be surprised if it dissipated in time. And yeah, finding those hedge trades keeps you in control. It means that it's safe for those assets to have a decline because you're going to make money on it. The hedge will profit while you're waiting. Whatever you've made on that hedge gives you money to buy more assets if it is truly low. If you truly want to stay back in and you have the time to wait for it. But your time horizon isn't 100 years on a institution, infinite. So like they don't change to, diversify into dividends at the end of their, 100-year span or anything like that. They don't have to do that. They keep managing the team. The team keeps benefiting the families that are part of that team in perpetuity, as so long as the team survives. Far safer than all of one's hard work to be squandered at the end of their lives and not continued and benefit people to come. At least that's the way I see it. Like legacy almost. Like which is important to people that do good things that matter, I think. Because what is it to somebody that's worked their whole life doing a good thing and for it not to be continued? It ends with them and all that they've worked for is only just formulated into material things that other people can feed off of, and all of what they've done to make what they can feed off of is lost. So what do they eat then? And what do their grandkids live on? I'm like, it seems like a problem. The 188 to this small B point right here. A little bit of a W forming. Oh, that gives me deja vu. We got this little 1, 2, 3, 4, 5, right? And then what happened? Well, we came from this, and now we have that. I mean, like, that's very, very, very much like what we were going over in the morning. This is one way for it to be able to do an S wave. When it goes S, that. I mean, what are the odds we take this move, put it here? It would only be even. And you want to know what's really weird about that? Is it would be a fifth wave as well. Like this would also be a fifth wave. Not to mention that this is also a fifth wave. I mean, like if this fifth wave played out like that, right? I mean, like how do you think this wave with these two corrective waves is going to play out? Does it give us? Does it give us this? That would be interesting. Quite interesting, actually. Is it not true that in the five wave move that we currently see right now, it just came back to the fourth wave for some reason? That interesting? Why are we seeing that again? When was the last time we saw that? The last time that we saw that, the market was interested in moving up on only coming back to the fourth wave. And it would do that. And we've seen how many times that a five wave move has turned into an only the only thing it was able to do is come back to the fourth wave. Where in this sequence it started with 1, 2, 3, 4, and 5. And why is it only coming back to the fourth? And it's like, did we not choose to make the advancement again on a five wave move? And is it not true that as of now, we are only at the fourth wave of that five wave move? Now, why? Why? Why would we move up on something that's meant, this is a bearish pattern. It's not designed to only come back to the fourth wave. It's designed to go down. It's designed to do that. It's designed to go down. Do another inverse head and shoulders potentially, which is also a five wave move as well. Put that out there. But it is the case that this pullback is the same as this one. Like the same spike that it had on the last pullback. It is true that the last M played out from a sooner fib, a 161, 141. This one's at a 227. And it's at the blue bar. Now, one thing is different about the blue bar that we have had, or that we haven't had before. We've managed to make more of an advancement through to the high of that gold bar than we ever have before. And that gives me deja vu back here. Notice that we had to hit the one barrier first and the second barrier after. And it's not the only area that we've done things like this before. Yeah, like look at this one for instance. We ran into the green bar and it was resistance. Then we ran into the other side of the green bar. And then it came all the way back down. Everybody thought there was nothing, no hope, right? Biggest move on the chart, down. Was it not the case that we just conquered it again? But how? Well, first we ran into it, then we ran into the other side. That created the largest dip anyone's ever seen. Somebody thought that was bearish. Well, they were wrong. And it effectively ran into the other side, respected the beginning side, and then turned it into a support, where it then recognized the green zone again as a support, resistance, turned it into a support, then worked on the red zone, where it first knocked on the original underside of the red zone, and then worked on the upper side of the red zone before turning it into a support, unobstructed by many people, because you can count on the fact that people that aren't professionals will be doing Christmas at that time. Or not Christmas, sorry. But they were just after hours. That was after hour session. 5 o'clock. But yeah, today's an interesting day, full of traps and spikes and wicks, all just to conquer levels very slowly with very small advancements. And any advancement that it does make, it's subject to taking maybe 74 to 88% of that entire advancement back before making another one. And I'm like, well, do you want to know why it does this? Because it works. Because people do buy late, and you can see because the volume isn't there at the best price. They all get excited about the big up, and then they buy into it just to get flushed like a toilet. And I'm repulsed to the idea of being on that side of the spectrum. Now, just to put it out there, this line's red yellow, and it doesn't look like it's anywhere near it. And it's not anywhere near it, but it is the last trend to break. This one here, it's an old trend. It hasn't been tested much. Is it appropriate to draw this one? I would say so, but something is wrong with its break because it does look like a swift, easy trend break off the 261. We do have to watch for that. Something to break it, but it ends up back at the blue bar one of the last few times. And I'm like, okay, next advancement that we make through that gold bar above, we step on top of it. I mean, like, could we grind it a little first? Sure, grind a little first. I'm cool with that. I mean, like, usually what we do, if it's a green zone, we like throw everything we have at it, then we come up at it and chop the crap out of it, make a node there just to chill at, right? And I'm like, well, does the mathematical precision go as far as, hey, taking this amount of spike out of the bottom and putting it on the top? No, it wouldn't. I wondered if it would be the same distance, but what's interesting about that is it could be in time. Distance that we've made out of the bottom of this consolidation could get us to the gold bar. It's just not instantly. Take here. And I'm like, is here really that big of a deal? No, it's not. Totally wait for that. So watch out for a retracement. If it does, that's fine. Nobody should be buying above the blue line anyways, but if you did, make sure it's safe. And I'm like, okay, I don't care if we do one of these and go up and then come back to these people after, making a small consolidation that finally gets through it and then going up. That would be the most complicated way. And I'm like, sure, this is the blasty bit that usually gets taken back. And I'm like, oh, a lot of people are going to be looking at it like it's a head and shoulders. They're all going to lose their money most likely. 80%, 75% chance, I'd say. And when we make a head and shoulders and we do this, right, and it gets to the right shoulder, and then it comes down to the neckline, that's not playing out until it breaks this level. Because when if you look up at Google, right, they actually tell people to short here. I am against it 100%. I think it's a terrible spot to short. I will never short there ever. It's terrible. I think they're wrong. This is the best place to short it. If you get that twisted, it's just absolutely insane. And I'm like, well, why would anybody value this point to short it and go down? I'm dead inside. I just can't even think about it. It offends me so much. And I'm like, well, at the end of the day, because I think it's the wrong way to trade. And I mean, it doesn't mean that it has never went down from this point before, but this point was a better point to value, 100%. And people that value this point settle for less than people than this one. Because this is not true that somebody has to trade up here in order to make it reverse. And why can't it be you? I'm like, well, in other words, why would we ever settle for something that's worse than what was just offered? Because if we know that that's what was just offered, then it will offer it again and we can be part of it if we understand that that's the point at which it was supposed to reverse at. Not to say that any of the reversals of today won't be bought back out. Every single decline of today will be bought out up to new all-time highs. And it's like, how much time? Does it matter if it's going to happen? No, it doesn't matter. As long as it's going to happen, that's all that matters. And that's the boat that the institutions are in right now too. They're like, as long as the all-time high happens, nothing matters. They want to get back to that all-time high so those assets can progress. And I can't blame them. They just don't want other people to be able to sell what they have too at the high. Because that means it's harder for them to push it. So they want people to actually be bearish when it gets to the high. So they can pay for the initial new advancement, save all their money, and get everybody else to get stopped out and buy at the top of all-time high. Because they originally short it, think it's going to come down because it's high. And they end up buying at all-time high and fueling the market to go even higher. Set the B point, ladies and gentlemen. What is it to one that's already held through this move before? Mm, nothing. We have to watch for it to get through the right shoulder, or sorry, the left shoulder high, which is the B point. And I mean, a little bit of a negative response at the B point could be acceptable because I'm like, well, it's a matter of will we get more people to short it if we do that? I think no. We could fail it initially and not do any kind of decline, and that would still be fine. So it's very risky to be part of the short in this head and shoulders because I have reason to believe it's going to blow everybody's shirts off as it gets to the target I set last week. Beauty, though. Beauty. Very, very clear, very, very serious, very, very concise, very disciplined, very, very accurate. That's what you got to be, though. And it's like, yeah, I have a belief, and it's positive for me. You know, it's negative for a lot of people that fear the moves in the market, but I believe that there is one way the market should be moving at all given times, and that is the way it is moving. And unless we see it, it's us, not the market that's moving the wrong way. It's us that doesn't see it the right way. And at any given time, if you do not understand what the market is doing, it is because you don't understand it. It's not because it's not moving in the right way. It's always moving in the right way. And that's my faith. Because I can't prove that. There's no right or wrong, really, you could say, because it's like it's always moving. It's all perspective of or relative to which trade you have going on. I mean, it's going to move. We can count on that. Whether it's good or bad is relative to the person that has a trade, not to the market itself. The market itself will continue existing, whether or not that counts. Well, it's gonna the shares are gonna exist, and market will continue to move. Now, a little bit of a negative response to the red yellow line, a little bit of a negative response to the B point, a little bit of a pullback for the people that are part of the pop. And I'm like, is that okay? Well, of course it's okay. I think that this left head
and right will have more of an impact than the neat looking head and shoulders. And the way that I think that this is best looked at is like a triangle. Because that's the kind of value that I put on a head and shoulders nowadays is until it is finished with the confines that make it triangulate, it's a danger to anybody that's a part of it. And I'm like, okay, fine. We came down to the neckline, a whole batch load of more people shorted it there. It didn't stay down long enough for people to really take profit. Where are they going to put their stops? At the point that we couldn't get through? I think a lot of people right now are dragging their stops right here. And that's where we're going to go for them next. That's going to be one of the targets. So, and watch the volume. And I'm like, you know what? If we convince everybody to put their freaking stops in there, isn't that going to fill this gap? Is that suspiciously particular? Like, let's move this over a little bit here. What's that going to do? If we get 1,000 people to short it and put their buy order stops right there, they're going to push us through that level if we just give it a little nudge. If we're like, hey, is everybody done shorting it yet? Is everybody done? Nobody else is going to short it yet. And then finally, once everybody's batched up in one thing, nobody will oppress against a small long order that will just gradually get us up to that point. And as soon as we hit it, it just like triggers a huge buy order. But right now we're trying to get chasers to add to the pile of stops on top of the right shoulder. And now remember, if you did take the right shoulder, this is exactly where you want to make sure that you're taking profit because it's a risky point from here on out. Like I said, it could make it back to the neckline. If you took it back to the neckline, this is the neckline. So beware. The right shoulder can turn into a W. And I'm like, well, that's kind of hardcore. Right shoulder could turn into a W. I'm like, well, what what does that mean when we go left shoulder, head, and then the right shoulder could turn into a W? It is possible. The neckline is where people try to short it, and that's where we are right now. This is typically where we would get wicks and spikes back to the triangle. And the first wick and spike out of the triangle is typically not the direction in statistical history of 2023 that it actually wants to go. I don't care what happened in the textbooks, but they're all outdated. They weren't made in 2020. Everybody's learning on things that, effectively don't really matter right now. And all of the information that's out there right now just seems to be on previous environments that don't relate to how things are in 2023. And that is the reality of it. So you know, it's fine. I say have them use it. Have them use moving averages. Have them use the golden crossover. Have them use all of what they see worked in the past. Because what works now are new things. A little bit more complicated. But it's not past grade 3 math, I swear. It's literally not. It's a matter of shapes, portions, sizes, distances, angles. What is past grade 3 is the discipline, the patience. Some people work their whole lives and they don't have that. So we know. We know. There's plenty of people that don't have discipline and patience that are, older than all of us. I'm like, geez. Somehow they make it through it though. But it's unnecessary. And it's always an interesting time when you can see that somebody that's had more time to be patient and disciplined than you have hasn't used the time. And I'm like, well, how is somebody that's like older struggling with that? And I'm like, because I think that it takes time to develop patience. The more time that you have, the more you have had to work on your patience. I'm like, how not? I'm like, I love the fact that these logical things they fit in. If you've been working on your patience, it's nothing to feel bad about. And I'm like, that's fine. You're more patient now because you weren't before, and now it's easier for you to go through those things patiently, and you reap
more benefits out of being patient because you wouldn't do it. You wouldn't put yourself through the difficulty of being patient if it wasn't worth it. So I'm like, well, it must be worth it if you're doing it. So I'm like, well, why not get better at it? If it's such a necessity to doing well. And I'm like, well, that's an interesting point. And today is a test of patience, especially for those that don't understand. And I mean, like, for what there is to understand, you don't get paid too much to understand it today. But God forbid you didn't understand it, it could cost you. So that's the flip side. And I mean, like, well, sure, all of the characteristics that we've seen today, from the triangles that have the little spikes at both sides, the consolidations that are matched an equal size distance on both sides everywhere, the smaller consolidations, the bigger ones, the distances that we've used, the angles that we've had, they can all be incredibly relevant in the future and on other time frames. Like, who thinks we can't see this on the hourly? Like, this entire consolidation that we've just done could just instantly print out on the well, it wouldn't be instant, but it would print out on the hourly and perhaps be a bigger version of the smaller things that we've seen. What are the odds we could do that? Of course it's possible. We should consider it. So it's all like, it's not for nothing. Even though it hasn't paid, a lot of people a lot of money to understand this triangle, it may have uh, intangible dividends in the form of understanding. So here we are, spiking out of the bottom of the triangle. We've created B points yet again to consider hitting on the short term. Little ones. That one's already toast. This one is already toast. And it is undeniably turned into a spike, like I said it was before it even made a spike. It is literally, what is the definition of a spike? Well, we came out of the baseline as fast as we came back to it. Came out of the baseline as fast as we came back to it. Direction does not matter with a spike. It's either going to be a spike up or a spike down, but you can get both, and whatever's given is taken back roughly at the same speed and same time and same velocity as what was just given. And is that not the case here? Yes, I say wicks and spikes because what's a wick? Well, a wick is this, where if we were to zoom in on the 15-second, you would see it's a spike. But a wick forms when it's so quick. Wick is quick, yeah. When it's so quick that it doesn't have time to formulate like a full spike. Like for instance, like these things right here, they're nice spikes. They come right back to the baseline of where they started. And like even in this one here, and there's spikes everywhere, to be honest, like all over the place. And this one, it was a quicker version of those spikes, which is fine. Part of the process of the triangle. Now, like we had another line, I expect this one to be part of our break in the future. It's really interesting though. The change of the hour in a few seconds. An important hour, I'd say. One that's been known to end consolidations in the past. Could it end this one? And undeniably, it seems to be difficult for anybody that has been buying or attempted to buy on top of the blue line. However, anybody that's expected it to be equal out of the bottom of the blue bar has been waiting for longer than they ever have before. An interesting change to bring to the environment when everything's been so interested in being below the blue line that now we're above it and we can't seem to get below it. Well, even with how difficult it is for bulls right now, it's interesting that this is a level that kind of works as a pinnacle. Um, no level has it been more interested in getting back to than this one. I know it spent a lot of time at the POC, but it doesn't mean it's gotten back to it more than it's gotten back to this one. It's certainly gotten back to this one more than it's gotten back to the POC. I know it's lingered at the POC a lot, but it's not like it's been the beginning and the end of many moves. It's just been where it's sat, the middle, where there's been spikes on top and the bottom. But I mean, it's been uneven all day, and we're getting ready to make spikes on top. Like look at how much movement we've had below the blue bar. You would think like, wow, really? Like we really have transitioned from taking all of this crap and putting it this on top. And for this amount of time, we've spent on top of the blue bar, where no other time in the history of mankind have we ever spent this much time on top of this blue bar. It's a fact. Not even before. Never, ever have we ever spent this much time on top of the blue bar, having not made it back beneath it. Then you could say that, these are just wicks and spikes. They're not breaking. If anything, these are the most powerful reversal tools that you can see on the candlesticks. Like they're not breaking. They're signals that it's actually holding. That's the interesting part about it. And tomorrow is undeniably going to be quicker than today, I think. I think even the most patient traders on Wall Street will have ants in their pants to come tomorrow morning. Patience is key. You will see. Patience pays. And it's not because it's going to hit these targets and be done with them, but because it's going to get through them. Just getting to this level, not good enough for me. I should say, and we don't have enough time in the day, I don't think, for much more than that. But that's okay if we do. I mean, I'm not going to complain. I'm going to move this over though, because I don't want to. It's relevant. Blinding though, so I'm going to just keep us a little bit lower than that top one. But this is good enough for now. Step on this. So, from above. There we go. Can't be clearer than that, right? So that. Now, like I said, when we popped out of the bottom of the triangle, it doesn't always have to be the last way that it's going to leave. Now, I'll tell you one thing. There's been triangles that have broken and they haven't retested at all. And they come back later, maybe. Depends. Sure, there's been some that haven't. But when it comes down to like over 80% of them doing something, and if it's like if you can see like it's like, oh, all right, we've got a huge dump and then it's consolidating, then there's a trend that's like all the way out here. You can see it likes doing something. Probably going to do that thing until that trend breaks. It's probably going to start to falter with that thing as it gets closer to the trend or as it knocks out one trend here. It starts to change a little bit and starts to do things it's never done before, and then it knocks out another trend. but it's tough about it. And it's really, really tough for everyone that's part of that. But little do they know, this advancement right here is one way to jab everyone out of the low and then keep everybody that was struggling below the support. And they keep everybody that was under here. They've put them in a tough spot where I think that ultimately we're getting ready to push through the gold bar and step on it from above, obviously. And I'm like, okay, when I say step on it from above, right? What that means is that you don't want to drag your stop above it when we break through it. And I'm like, okay, let's say for instance it goes boom and it goes right through it and it doesn't step on it at all. Well, does it mean it can't? No, 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 no. Of course it can. And it might, right? So we have to be careful with that at the end of the day. Uh, could it step on it like a little bit and then go? And does that count? So it stepped on it, safe to drag your stop above it now? Or what? Or can it not step on it again? And again if it wanted to? Could it make a neckline out of a head and shoulders off of it? And then fail the head and shoulders? Because I mean, is that not how we're doing the blue bar? And is the blue bar not the most formidable resistance of the day? Think about it. Nothing but wicks and spikes have passed it. Like, what has ever gotten above this blue bar that hasn't come back to it as quickly as it's pretty much left it? I'll tell you one thing. It all changed here. You want to know what happened there, ironically? Is the red yellow line actually broke. And when it actually broke, they managed to make a pullback that did not get to the blue bar. And instead, it had the audacity to make new highs. Not only just new highs but beyond this point, but new high of day. Before taking the longest time that it has ever taken to come back to the blue bar. So three things changed at that point. Four, actually. The trend break, the fact that we didn't get back to the blue line, the fact that we advanced to new highs beyond this high, and the fact that it took even longer to get back to the blue bar than it ever has before. Wow, how many more changes do we need to see before we understand things are changing? Because it certainly ain't doing what it was doing before. Because what it was doing before was wicks and spikes through the uh, green, or no, sorry, through the blue, and then it was making big moves out of the bottom. Just little ones out of the top, big ones out of the bottom. And now look, what's out of the bottom since this point? And I'm like, wow, really? Like, look at how much was out of the bottom, how frequently things were out of the bottom there, and then all of a sudden, you could call that the fifth thing, is that everything that happened from this point was not even on the other side of that blue bar, and that's a fact. What's this? You count that? I'm like, no, 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 no. That's terrible. And at the end of the day, um, we can see that things have changed, and I can prove it, right? So other people will say, well, it's like, in the consolidation still, a lot of people look at it like this. And it's tough. If you can see that, if you're like, hey, I think a really big move is going to happen to the upside. Well, it did this. A move is really big is going to happen to the downside. Well, it did this. And that's tough. But every single moment we've been working towards advancing in this consolidation slightly higher. Like so slight every time. So slight, you know? And then I look at this and I'm like, just like that much. Like, that's okay though, right? That's what we're doing. That's how we do it. It's very, very slight. And I remember that. I can see that. So it's is it allowed? Well, of course. And when they make it like this, I think it is the case that everybody can clump their stops into one spot? Is it the gold zone? Maybe. I wonder. Because I tell you one thing, getting through that level is something that we really haven't seen before. Like, let me think about this. Okay, like what is this level right here? And is it the same distance away? No, it's not. It's not the same distance. But let's look at it for a second. Because when we look at this distance, this is the distance that encompasses the VWAP. It's the distance that encompasses the low of the node. As this is the distance that is the high of the node. Almost like in a weird way. Like I could switch this for a second real quick. Just to show you that it could be like that. Hmm. I uh I can't bash that though. I can't bash that. But it is marked the other way. As this is the original way. Now, the way that I read this is not that this is the green zone and this is the red zone. That this is a red zone that's been turned into a support. And undeniably, this has been used as the most profound resistance that we've seen since the beginning. But just remember, the first test was on the beginning side, right? On the underside. And then the second test just so happens to be on the exact other side. Remember how it all started? Remember how we broke through different levels and we conquered them by hitting the beginning first and then the uh sorry, we hit the beginning of the green bar first and then the end of the red, or sorry, then the end of the green. So first hit this one, that's the edge, and then the other edge. Okay? Then this edge and then the other edge, but then it stepped on it. It was like whatever was a resistance first became a support. And then whatever was a resistance first became another support. And then we did it again here. And then confirmed it again here. And then look at what happened at the next barrier, the red, and then the far, back to turning it into support. And then we turned this into support right here. So is there a way of breaking down the barriers to be able to move through them? Or is it that way? And I'm like, well, it's to be that that is the way. Now, how do triangles work again? We go over the triangle making an S wave like this, or making an S wave like this, right? Either which way, the people of the entire triangle are put to the test on the moves that end it, right? And you look at who's safe on those on this triangle. It's like, yeah, barely anybody, right? Like, well, what the people that are safe are up here? Well, you know what's funny about up there is it wasn't a triangle when it was up there. There was absolutely no sign of it being a triangle whatsoever at that point. If anything, it was a rising wedge. If anything, it had that consolidation with a spike out of the top and an equal sized spike out of the bottom. It's funny that it took back most of the blast again, but it only left the wicks and spikes, the least amount of people. And what I think is happening at the extreme prices, anyways, is when the people do catch it, it's very likely that because they're offered such a great profit instantly that they take most of it. That's the price of getting a good entry. They don't know the value in it. And at the end of the day, when it keeps pulling back and pulling back and pulling back, especially out of an environment where um, every single dip that you were buying effectively made you have to try again to get to this point. If you were part of the short-term shenanigans, you're still holding from pretty much any other day that I've ever said to hold. You're good to go. And I'm like, well, that's it's interesting that they put them through so much trouble. Just for what? Just to be in for this. Was this what they wanted? No, no, no. They all wanted far more than what it's offered. But the market wants to make sure they really want it, is what I see. And I'm like, yeah, sure, this is the slow bit that might have the B point at the high of it when we're done. Like this level right here might be the B point to these fibs. We could come all the way back to test this, to step on this from above. And could it be from here? Could it be like this? All the way up? Hit this one, come test, hit this one, come test, hit this one, come test, hit this one, come test. And then, get hung up on the 127 and not actually make it all the way. I mean, I wouldn't be surprised. But this, I type it in English, but it doesn't have to be text for you to understand it as clearly as I've wrote it. It can be clear in the sense that we can see the value in making it very difficult for people to be exposed to this. And then when we finally give it to them, we can see that their work wasn't essentially in vain. They're trying to get things going now, it would seem. The triangle having been tested from both sides, the head and shoulders having come down to the neckline and failed. Well, yeah, it hasn't failed until we've broken through the head, but that seems to be imminent. The green bar above longs to get tested. If we lunge to the green bar and it suddenly stops moving slightly before it, it's very likely that when we do get to the green bar, that it will be at the same point or lower than when it stops moving. So if it jabs up to here and then starts going sideways and dumps down, it's like that point right there may be the point that it actually runs into it anyways. And people like they have a lot of energy expenditure in this amount of time waiting for it to be a price that they've already had. So it's kind of interesting. Ultimately, what I would like it to see is for it to step on top of the green bar. And I'll write that in too. Why not?
like a right shoulder that's fighting to be on top of the head, but pretty much we've taken this left shoulder, this head, and this like basically what was this right shoulder, and we've come above the right shoulder already. So where we are with it is the fact that, the right shoulder did turn into a W, and that's what we went over. The W even played out. But basically that's what we were going over. I'm not sure if it was on this chart that I was going over, but no. Um, but it's still very, very relevant, and we'll see more of that, I think, in the future. I think the most important pattern that there is here is actually the smaller continuation patterns that we can see, like the inverse head and shoulders that are actually at the high. They take back all of their blast. So it's like anybody that got excited about the inverse head and shoulders, they they kind of like ruin their party first before continuing. And I can see that the definitely definitely working its way towards the targets ever so slightly with ever so particular advancements. So here we are working our way towards the edge of the node, where basically all that remains above this point are only wicks. You can see that on the volume profile, we've got barely any volume across the high, and that's just representing the small amount of movement that we had through that high in the past before making a new high of day on the break of the red yellow line. We can see many red yellow lines have been placed today, and they're not the same technically as what we've been used to. Um, but parts of patterns that are essentially contradicting the pattern's play out. Like basically I've been making them like this. Like this line today has been a red yellow one many times. And this is a line that's not supposed to break to lead to new highs, according to how many pages of Google? If you type in head and shoulders trading pattern onto Google, you will get dozens of pages of patterns showing you that it will not do this, but it instead will go down. That it will not break the trend that forms from the head to the right shoulder, but instead will continue to go down. And it brings me back to that idea that people are so busy looking at what can be an opportunity for them that they can't see the danger right in front of them. And I'm like, well, if you only learn about how the head and shoulders can benefit you, don't you think that's dangerous? Very, very interesting. People are so greedy that it's like if you don't learn about the dangers, the danger it doesn't benefit you at all. Like actively, it doesn't pay you to learn about the dangers. It just prevents you from losing money in the future. But I mean, that's not motivational enough for a lot of people because it's not paying them now. And I mean, like, well, I think it's vital to understanding the dangers so that your work is protected and that you're you're not wasting your time or money. So at the end of the day, I wanted to say like those people of the Head and Shoulders because I mean they wasted their time and money, being part of it. And like I said, I was like, wow, when we got down to the low, I was like, literally, if you did take it, then make sure that it's safe. Make sure that there's no way that you can take a loss on it again. Make sure that you understand that hedge trades are meant to be knocked out.
if there is long-term aspirations for holding for a prolonged target to the upside, well, this is exactly how to do it. Now remember what we did before. We would have a response to the edge, a negative one from one side and then a negative one from the other. And it could be a little bit drastic, sure. It's fine. After all, we have been working our way into the level we're supposed to quote unquote step on top of. And this is not an abnormal way to do it. This could be part of what could be a grind on this level. Nothing I would ever choose for it to do, but it is something that likely. Again, I think that this dip that we're having now is actually part of a ploy on trying to make people short it. Try and add even more stops to the high of the range. Because the people that have already shorted it have experienced more of a dip than what it is currently offering. Some people may try and see hope in holding, waiting for it to come down even. I think that this dip is meant to try and get a few more people batched in to the rest of them so they can stop them all out at once. And of course, previous trend lines like the ones that I've got on there now, of course, they're not affecting the price, but I use them to explain different times that we were there at other times of the day. And obviously, the price is over here. There's no way that this trend, or these trends are even remotely likely to be touching the price. So I know that it seems like clutter and it seems like it's something, but I'm like, it's completely irrelevant to be even looking at this portion of the screen. We look at, I would say at this portion of the screen right here, very, very irrelevant. Um, like if I did that, it would be fine. We're not looking there. But at the end of the day, the uh, the area of focus that I have remains around here. 80% of the time I'm looking at this. And I can see how the previous trends have worked in the past, and we can use that as references to how the future trends can break, but not not exactly the same way. And this is part of the process. We're not trying to get caught buying at the highs so that they can get dinged for market manipulation, raise their average prices, and be in from the top. Those are three bad things for the institutions to be caught buying up here. But if they can trigger a frenzy of people shorting and their shorts not having an impact on the market, and if we can clump them all up together here, it'd be perfect. And I think that the institutions today are having a tough time clumping the people that are here together. It's like it reminds me of, trying to clump together like a hamburger that keeps falling apart or something like that. But that's what it's like today. It's like there's not enough substance to be able to push the market as much as they would like to. Therefore, we have a lot of slow
don't have a lot to work with, and a lot of the moves that we have had, can be accredited to the institutions that are here, which is a dangerous way about it. And they're fighting with fire, basically trying to make all-time highs again, and not getting caught paying for it. The only other theory that I have that's a little bit out there is that it could be the Federal Reserve, but that would mean if the Federal Reserve was the composite man and on the other side of the public's bad trades and responsible for all the precision that we've been seeing, um, that would be tragic. That would make me shameful to be part of the human race if we did that. Because that would be terrible. That would mean that the government's stealing money off of the people and then taxing them. And I'm like, that would be, I don't even like to think about that. It would be so bad. So I assume it's institutions. And but I can't prove it. I know it's somebody though, and it's definitely not the public. So interesting. The fact that it could be the Federal Reserve, intriguing. But doesn't matter as long as you know that it is something and that they do have an inclination of moving the market exactly to the targets as we see them in the way that they should be moved, exactly with the micro movements lining up, exactly with the long term moves, and everything fitting exactly the way that it should be. Unbelievable. But the record is all in the chat, and you could watch the recordings if you want. But I'm proud of everything I've said today and everything I've said before, and here we are with every single position working exactly as it should, exactly as intended. Notice that everybody's getting stopped out right now and they're using a huge force of everybody's short position to push the market higher, getting towards our targets. Few people will find themselves part of these major moves at all-time high because of the bearish news or whatever it was, many reasons not to be in. So, but all of the bearish news of what they had to say about every single uncertain time that they've had to say has all amounted to us getting back to all-time high. And just remember that they were all wrong. It makes me question. I'm like, I don't even consider anything to it anymore. I'm just like, I see exactly what's gonna happen. So get any kind of news to taint that or whatnot, because the news can be wrong and they don't get in trouble for it. And then what they get paid for is to make sure that you're entertained. So they make sure that your eyes open up when you read their articles. Like, wow, oh my goodness, like tell the friends and stuff. This is what's happening. And as soon as you see somebody do that, then everybody thinks it's okay to do that, and it starts like this snowball effect of everybody's interest in the news, and basically, I don't know. I guess it takes discipline to say everybody's doing something and you don't want to be a part of it. And even if you have to be alone doing it the right way, then this is the way that you'll do it the right way. And it's not your way because there's only one way, and it's the right way. And you're either with the market's moves or you're against it. Not my way or whatnot. It's either the right way or the wrong way. People don't get that. And that's the way I look at it, very much so. And it's very important to understand the right way. It takes uh, effort. That's what it takes to understand it. Just like it does to learn a language. As much effort as it does to learn a language, I would say. A lot of effort. I've only ever learned parts of languages. It's far more effort than I've been willing to put in, but it doesn't have any kind of reward like this does, right? So, at the end of the day, priorities.
Now remember when I said that we come up and we get close to the green bar, but by the time that we get to the green bar, we'll basically be at the same level that we were when we originally spiked? Well, I think that they heard and they're doing that. Basically, whatever dip that we have now should honestly take the same amount of time or more to get back to this level. And if it takes any more than this time, it will be lower. And that's a fact. And if it takes less time, then we can get through it and step on top of it even easier. But you want to know what's funny? Is no matter what it does not change the fact that I believe this is going to be the final result. And what are we doing now, if not stepping on this from above? Are we doing that right now? Or do you have to step on it more? Well, it's not truly a step until we pass the high. Is a step to what? A step to the end? Well, it's not a step to anything, so it's hardly a step if uh, if it's not going to be to another one. I want to make sure that we're aware that there is a trend here, and in the event that the trend breaks, it's kind of hard to be part of that step still. Honestly, I am pleased that I don't have to be part of this little movement here because it is very much trying to psych people out. And that's part of the theme of the day, you could say. But so long as that you remain exposed to the final target, where I was like, I didn't even make it today, I made it last week. And I've only modified it to be more profitable. Instead of getting to this level, I made it through this level. And instead of only being stepping on top of this level, I've given us something else to step on top of that's even higher. It's even higher until this time. And if it's testing at this point, I don't even care about it because it's not what I want. I wanted to test before. I'm like, here. I'm like, this is what I'm working with here. I don't really care if it takes any time between now and here. Honestly, I don't want it to take that much time, but I'd be cool with like this. Yeah, like this is the close, so I'd like to see a test before the close. And it's going to be because it stepped on top of this. And it's going to be because, it could have just blown right through it, but it chose to step on it, chose to make it into support, chose to make this resistance that otherwise has been holding us back for a prolonged period of time, for many movements. Now, after all of that, all these people have been bought out, all these people, and so on, all the way up until everybody's been bought back up. It's either they've become a buyer or they're at a loss. That's the short traders situation. And the market chose this. I mean, this is the way the market decided it should be. And it's not a positive thing or a negative thing. It's just it is for whatever individual is exposed, to it. If they're exposed short or long, then it'll be good or bad accordingly. But when you know that you have a long-term exposure in one direction with a core position, and your job is to find moves against it, your mind opens. You don't only see the things that are good for you anymore. You start to understand that your real paycheck, what you're going to pay yourself on, is going to come from those hedges because you're still holding that long term core every single day. Income comes from hedging. increasing the fact that, hey, if it, let's say for instance, let's talk about an example. Now, let's say you went long here, right? And it went up, 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 and then you did this. It had a move like this, this. I'm gonna make it easier. This, 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 and this. Let's say it did that, right? And you're long from here. Now, if you hedged it short here, here, here in a hypothetical situation, let's say you even missed one of them. You know you've made far more money than you have been waiting for your long. Like in the event that it decides to that this is the daily. Now all of a sudden, you've been focusing on catching the highs, 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 and each time it's slightly come to stop you out. But you've managed to do three in, two out, three in, two out, three in, two out. So each time you're managing to take off two every single point that it makes the low. Doesn't matter that the last one gets stopped out because that's your insurance policy on the fact that if it comes down, you've still got something from the top. Means that that one could come in handy when you're interested in buying again down here. You don't have to do it with nothing like every individual wants to do it. They just want to end up with one trade in one direction and then cut that exposure and lose all accountability and for it. And I'm like, well, short-term individuals find it very difficult to turn their trades into something that they can hold. If it takes discipline to do that. So if the target is ultimately to get through to the highs, like I was saying on last week's post before the end of the day, um, trying to get to the gold bar at the top of this range, that means that every single position taken before the original break of the red yellow line is exposed to the long-term journey of this level. So it doesn't matter if you're taking small short-term trades and you've taken off a few contracts, that last one that you can have can run to the target, until you've built up enough of a cushion to increase that one to two or three and four, that you're holding more. Now, of course, we have another trend line that reminds me of many others from before. This one here, it's very similar to what we've even done in this one, where we had that little bit of a decline after having run up, kind of like an M, and then it comes back and hits its B point. So far, so good. And then if it decides to come down and make a W and then break, I mean, wow. It'll be like the 10th time it's done that today, so very much a smaller version. So like computers and people that only look at one time frame definitely won't be noticing the similarities. And basically, it's like a smaller version of what we've done before. Kind of angles and everything fly remarkably. A trick that's relevant to the situation, not to every triangle, but we can see that this is actually kind of a confinement area that we've used in the past on a very short term scale as well. The volume dissipates as we get higher, which is interesting because, like I said, I don't think it's the public's volume that actually pushes the market the majority of the time, but the institutions that happens on other exchanges that actually isn't visible to the public, which should be illegal. Nobody knows about them because they are, by definition, dark pools.
meant to keep the individual dark. And then, yeah, all of the dip was bought back up. By the time we get to the green bar, we'll be where we were before. And that's what I said. As soon as we lunge towards the green bar, where we stop, it could involve us getting back to the green bar at exactly the same point that we stopped moving. And if you go back in today's video, that's exactly what I said. Wouldn't change it if you paid me. The idea that this is doing exactly as it should is on the table. Notice that there was a triangle here. The triangle did return back to itself from both sides, relatively the same kind of distance out of one side and the other, maybe give or take a couple points, but it doesn't matter because at the end of the day, it's doing its job. At the end of the day, it's doing what every other triangle has done today, and that is come back to the tip from both sides. And of course, in the process, made it incredibly uncomfortable for anybody that was positioned inside the triangle. So today is the market trying to tell us that the worst place to trade is inside the triangles. Because undeniably, that has been the one spot today that if you find yourself trading inside of a triangle, at some point you have allowed it to either become a loss to get to where we are, or you've been comfortable, or you've been stopped out trying. I'm like, well, I've noticed that today they've had both sides um, tested frequently. And the one thing that I love about when we test both sides like we just did is that we're done. That worst thing about a triangle being contained in the side of it, the best thing is ending. Best thing about that pattern is when it ends. Because we don't have to sit inside of a triangle anymore. You know that every single move that happens inside of a triangle is smaller than the last one until it ends. So the best thing to happen to a triangle is for it to end. To find value in a move in a triangle is risking being part of a smaller move than you just bought into until it ends. Unless you're anticipating which way it's going to leave the triangle, and good luck with that because it likes to leave both ways. So the best way to be in a triangle is to already having been positioned before it and to hold through it while everyone fights and plays the game and gets ruined doing it. Of course, the more you understand what the triangles, the more you can be a part of them, but at your own risk. And I don't endorse it. I don't like trading the triangles. But of course, it's not like I haven't. It's not like I won't. But it's just I don't like to have anyone here trading triangles because I mean, look what it does give if you are right. It's not as much as what you get if you trade the other trades we talk about. So why settle for less becomes the question again. And I mean, like, being picky is a bad thing in most things in life, but not in this. Being picky, being stubborn is a good thing, ironically. Financially, it's actually a good thing. You want to be stubborn about it, because you don't want to do anything that's out of line. You want to actually stubbornly stick to your rules. Under no circumstances, stray away from uh, done. You don't want to look into something else and start becoming like creative with something that is a right way with a mathematical tool. When you're taught math in school, we don't try and find our own ways to do it usually. I mean, I certainly didn't. I was always under the impression that somebody else would be able to do the math better than I would at all times. So I never even tried to become good at it because I knew that that wouldn't be something that I would do in life because that's already somebody's job, and they can do that and I would do something else. And it's ironic because the math here doesn't involve numbers like 80% of the math that we do in school, maybe 90. It's like we're done with the shapes pretty early on, I guess. But at least when I left, it was all numbers. But at the end of the day, the shapes are kind of like something that once you get through them, you kind of forget about them. You don't think you're gonna need them. At least when I looked at the shapes and I was learning like Pythagorean theorem and stuff like that, as much as it was cool learning it and stuff, I did forget it. It's not something that you retain because it's useful. It's not useful in my life. It's to somebody else, sure, not mine. But at the end of the day, other tools that we see on a daily basis here can be used. They're far simpler than Pythagorean theorem as well. Which is ironic, because what is it about clicking twice with the mouse across the highs or lows of a range is difficult? I mean, I think it's very, very much the more difficult to do Pythagorean's theorem and calculate. And the difference between the different triangles and such like that. Like we learn about triangles in school and stuff. I didn't think any of that would be useful. And it's truly not to me now even. Like I'm like I don't name the triangles the way that I learned them in school. Like the obtuse or whatever, and like we don't we don't do that. Why don't they teach us the right things in school? I don't know. Who is using that? I don't know. Maybe carpenters or something. I don't know. But at the end of the day, we have our own methods for naming these triangles, and they mean certain things using our language. And it's not the language I was taught in school. Everything is wrong in school, as far as I'm concerned, when it comes to technical analysis. They teach you geometry if you're going to be working with blocks or shapes, or not blocks or shapes, but with engineering or something like that, like trying to use the numbers, but not so much. I don't think numbers are relevant to this. At least with these, the numbers can be presented. All I have to do is hover over. I can see all the numbers I want on every single one of these levels and how they relate to each other one, and how we can actually use the same kind of angle. You can see the 27-degree angle was used on the support as well as the resistance before doubling the range. Same thing happened here. The same angle, roughly, was used. Now, it's not like it hasn't been in the past. It's just sometimes when with the smaller short-term ranges, we get wicks and spikes out of the tops and the bottoms of the ranges a little bit more frequently because it's a little bit harder to keep that precision on the short term. But of course, this is the next step in the sequence of targets basically that I've set for the day, and the name of the game is to remain exposed to everything that should happen, and everything that should happen has happened as far as I can see.
The oil. Beautiful. Hey, that's the gold bar, ladies and gentlemen. Then patience. What did I say I was gonna say? I was gonna say, and this is what it takes. This is what it takes, ladies and gentlemen. Literally, it took that entire consolidation for the market to decide that it should get to exactly that gold bar and snipe it like that. Just like exactly like that. And then now we step on top of the green bar to advance even further to the red bar to this level. Not only to this level, 2 is fine. the short term. For the short term, we've got this post, which shows how deep it was when I was showing everything I needed to for everyone to be as successful as they need today. And there's probably half the amount of people in the call now as there was there too, which is kind of interesting. People can't take it. There it goes. It was 11:18 when I posted this one. I was down here below this break, so that you could say the majority of the move, being captured within that time frame. Let's Sure, I can take these parts off. I know they just like stun the mind of people that don't understand technical analysis. It's like completely the brains just shut off. They can't see. Oh, you know what? I'm gonna leave this, and uh, and they get like stunned by the information. I mean, like, what about like the flip side? The institutions would be like, guaranteed. You show them the information, th- they wouldn't feel comfortable until they understood it. Everybody else is like swatting it off like it's not meant to be learned or understood. Like they can't comprehend it if they tried. And I'm like, well, what's the risk to not understanding it? You trade against people that understand it as clear as I do. The risk, huge risk. And it means that it's like many other very 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 risky things. We don't do them until we're ready. Like our society doesn't allow us to fly planes or be doctors, like I was saying before. We pass the tests, but in this, qualify ourselves, and that means it's down to our own personal accountability and our own discipline, our own patience with our own selves to be able to say, "Hey, I'm ready." Is don't be surprised if I keep like if you come and ask me and if I say no, don't feel bad. Just keep going. That's all you have to do. You have to keep understanding. Like the guys that I had that were doing the best that they've ever done, right? They talked to me a lot. And you want to know what I said to them a lot is no. Uh 80% of the things that I told them were to not do what they asked. And you can't be afraid of that because their rate of learning was significantly higher, having no problem with me telling them no. So it got to the point where we could even joke about how many times I'm like they could expect that I was gonna say no, but I wouldn't just be flat no. It would be no because this, no because that, no because this. And then it got to the point where it was like, you're gonna ask me this question, and you know what I'm gonna say to it? It's gonna be no because what? And then it was like, okay, okay, okay. I never heard that question again. Can't remember what it was. It was something normal, but I'm just like, nothing crazy. But I'm like, I'll remember that moment, and yeah. But here we are, ultimately trying to get through, as I mentioned when we were at the green zone, to get to the red zone. Because the green zone and the red zone are related. They are related. And it might not seem like it. The idea is we have to step on top of the red zone too. And I mean, the red zone could bring us back to the green zone. Like that whole blasty bit that we see on top of the green zone, I'm like, yeah, 90% chance it gets taken back. 90% chance. I'm like, wow, 90? Really? That's crazy. And we're still supposed to hold through that. Even though it's a giant spike on the bottom, a consolidation with a spike on the top. When it comes back to the baseline, how do we know it's not going to fall through the entire thing? How do we become safe through holding long through this? What's one way that we can stay safe, stay long, and be safe if it was to come all the way back here? And how are you going to make it so you don't just have one contract left either? If you do, that's not bad. But at the end of the day, after you've done that one contract, and you end up with one contract, you gotta be paid more than one contract, at the end of the day. And increasing to two is never something that you do just because you feel like you're ready, but because your account can afford it. So you have to be able to essentially take that one contract to the target many times, take that small amount to the target every time before you can increase the amount that you're holding, because it's riskier to hold more. And if you're going to do something riskier, then it has to be justified by something. By justified by using the profit of your last trade and not even all of it. It's like I say, it's like if you want to increase your size, well, make $1,000, let's say, uh, with low size, and then you can increase your size using 500 of the 1,000 that you made. And if you lose it, then you have to make another 1,000. So you're always advancing by 500 every single time that you do it. And no matter what you do, the only way that you can advance is to compound on that original small amount. And you build up and build up, you add another contract to the mix, and you get more flexibility. The more that you succeed, the more flexibility you've earned. Just like in other businesses, the more money that you have, the more opportunities that you have. The more opportunities that you have to get involved with things. Did you have the time and energy? But at the end of the day, it's very much the same here. And I was talking about energy expenditure too. I used to literally come in and and I would be so hyped up in the morning, right? And when I didn't know anything about anything, and and I would just basically be trying to see what the market was going to do to me every day. I would buy into a position. I wouldn't have any idea why, and it would be a stock of some sort, and you know, basically try to figure out as much as I could on that stock and read as much as I could. I was in the same spot as everybody else. I learned how it was so wrong to be like that. So, but I'm like, well, what else are you supposed to do? If you're a human being and you've been thrown into this, and it's like you look at the information the public is providing, well, you can see what everybody's doing very quickly and you can see the results that they have. Very scary. But what people will do is they'll be as emotional about the news as the people that are having a negative experience about it. And they'll kind of have that negative experience themselves, I think, in the future. Because it kind of spreads like a plague, like a cold. And it's like for me, when I hear news, I don't allow it to like emotionally attack me. Like I'm cynical about it. I'm like, yeah, right. First thing comes to my head, bullshit. Every single time I hear news, I'm like, that's just literally like the more convinced that the person is, the more I'm thinking bullshit. Literally. The more I'm thinking, oh, this is going to be how they round everyone up today. Not going to be me though. And the more convinced that they are that something is going to happen or something is going to be a certain way, the more I think the institutions have just simply done their jobs. And under no circumstances will I share the common beliefs of the new. It's like I'm against it. I'm not only just. It's not just like my opinion. Like I'm actually against it. Like it's actually something totally against. Like I think it's like yeah. It's like a bad habit. It reminds me. I don't know. Like I'm trying to think of a bad habit that I can relate it to. Uh, but a bad habit that somebody else would have that bothers you when you see it. I think of all the things that that come to mind, and I'm like, well, it's not like I can't remember myself doing them at some point as well. But like even like smoking, and I was like, I don't smoke now. I can't stand somebody smoking around me. But I've smoked around people before. I used to smoke for crying out loud. But I can't stand the idea of somebody standing next to me or sitting next to me and smoking next to me. It's terrible. But when I smoked, I could handle it. But now I can't. Bothers the crap out of me. Unless it's a cigar or something. But if it's a cigarette, it's brutal. I just think that it's I see the risks, and it's not only uncomfortable for me, but it's like I can see the risks of inhaling the secondhand smoke stuff. But yeah, I'm glad I don't smoke anymore. Jeez, that was that's one thing. Nicotine addiction is it needs to be like people need more help with that. I feel like it's like everybody's just like we're like, oh, it's okay that this person smokes. It's like it's not really. It's actually they need more help. I think, and everybody that smokes should be challenged with running down their street at the end of the month and see how effective they are at it. And that's what really made me quit. I knew I was no good to help anybody, and I couldn't even run down my street without dying. But yes, we step on top of this level like we stepped on top of every other level, and slowly work our way into the balance territory where we could be centralizing for the imbalance. As high as it may seem, today it did exactly what it was supposed to do, and that I will not trade for any day, movement or not. A day that it's done every single thing I've said for it to do. Very, very interesting. Every single thing that it has done, there's not been a thing that it's done that I haven't talked about. In the process, getting toward the goal that I've otherwise set, been no move that has been against it. Been always progressing as it should be, with no change in sight, no thought of something else happening. There's one thing that was supposed to happen, and it was set last week, and it's happened. Like, and people might look at it like, oh yeah, it's what it's done today is a result of like, oh yeah, today was kind of crappy because it was slow, but they forget that today wasn't a trade from today. Today was a trade where we could see, or it was it was way down here, way at these blue lines. That was the trade, ladies and gentlemen. Not this, if you're doing it right, right? Or how not if not? Or did I say to take it from up here instead? No, 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 no. It's been it and to hold it. The plan. If you stick to the plan, like it's the only thing that you should be doing, don't be surprised if
the plan rewards you for the full benefit of what it's literally, it literally tells you how much it's going to pay you before it even pays you. I'm like, well, here's the target, and if you move shares into that zone where I say it's the target, you will be paid for them, And I'm like, well, that's the interesting part about today. And through this level to where though? I don't care where. I just want to see the power of the institutions past this point, because it will show me exactly what I have to look at next. I'm like, I don't get to decide where it wants to go. I can look and have a rough idea, but what the market's trying to tell me right now is that it gets through this level and then it steps on top of this level. But this level is a point at which it must be made safe. It is the short term level. It's not a level where I'm particularly interested in hedging it. The best hedge I could see off of this is red zone to green zone. The green zone getting tapped from above is something that can happen on the imbalance even. And I mean, it's the name of the game, not necessarily to get exposure to that move, but to get exposure to the volatility of the imbalance, you know, to make it safe to hold through this imbalance. Now, one thing I'll tell you is 90% chance they have complete control of the imbalance. And the imbalance is likely going to be something that will get people out of their way again. So we have to watch out for that. The imbalance is probably just going to be a ploy on making long traders sell their positions and short traders get into positions that will otherwise make them into losers. And I mean, like, that's tough, but that's serious though. And I mean, like, that's what I'm seeing with this. And I mean, like, that's very, very straightforward, very, very, very stern, I guess you could say. And I like that. We need that. It has to be that way because it's not a fun time for the people that don't see it this way. They're getting absolutely railed. So it's like, and it's on cue as well. Quite remarkable, though. And it's like, yes, I can make today into a very, very small, easy to watch video that doesn't take very long to understand, but I will find the point where I say this is what it takes. I was like midday, I'm like, I'm going to be posting about this is what it takes later, deja vu, so on and so forth. Literally, it did it. And I posted, this is what it takes in capital letters, exclamation marks. As it did take this much. And I'm like, damn. I would never have it take this much. So it's not it's not my doing, right? I don't not unless they're listening. But man, I don't think so. And at the end of the day, I'm like, well, I don't accredit it to, you know, anything but technical analysis, being able to understand it. And it's not the technical analysis that you can just find at face value on Google, but really picking apart the logic of the situation, the distances, the angles, the trends, the patterns. Like when there's a new pattern and it's got 7 sequences, will you notice it? You know, and will you understand the need for it? Now, that's the key. And I'm like, I'm confident. Tomorrow, let's do this. I know it's going to be moving more tomorrow. And I'm like, look at what they did right now. They did everything the right way. I know it's going to be moving tomorrow. These people are telling me pretty much by what they're doing right now that they have won the game, that they are like, what a nice holiday, you know, going to enjoy my night tonight. We put everyone exactly where they wanted to be. We moved the assets forward. Everything is brilliant. Nobody's in the way. And they win again. They had the patience again on top of the public again. Now, isn't it funny that we are getting through the level that we were supposed to get through? Now, all of a sudden, even more profit. Almost at the 188, 200 or the imbalance. The red zone, wicks and spikes maybe on top of it as we test it from above. The red zone gets tested from above. Even wicks and spikes can happen out of both sides. Usually it's designed to get to the green zone, so no stops. Oh, so any stops above it
are likely to get stopped out. The 188 is coming to and the red zone. Now I'm like, well, do we see a grind or a hedge? You can see how this is paying for everyone to have had the patience to have held this trade. And nobody's interested in selling anything, only hedging. And if you hedge with less than half, then you're safe. If you hedge only once, then it's impossible for you to catch up with how much you're making on your core. If you hedge twice at the same level, then you can match how much you're making. But if you ensure that the only time that you hedge is once at any given level, and if it's less than half of your position size, where you're interested in taking off three, or well, it depends if you're not an NQ. Yeah, if you're doing half your position size, you take off three and let two run, three and let two run, three and let two run. You can make good money doing that. 227 for me is what you say. 261. Oh, okay. Ah, you know the 261's an old 188. If you go back to the fibs of the morning, well, it's not this morning. It's this huge dump right here, right? That that spike right there will have effectively formulated out of the other side by the time that we hit that level, which is incredible. Because what that means is that we've had a giant spike out of the bottom, a consolidation, and a giant spike out of the top, the same size as this one. I mean, it'll be a couple days or a few days, maybe even a couple weeks before the people actually realize if they keep doing this over and over again. So we've got a little bit of time with it, I think, before everybody starts obstructing its ability to play out.
Testing the 188 and 200 from above could be on the table too. I don't mind that.
So you can see it's trying to test that 188 200 from above. We're approaching the imbalance, of course. It's not too far away. Yep. Yeah, no, it's good. Well, yep. Kind of the theme of the day, though. No, no. I think that we can see that how it's like right now is what I think we're going to see more of. I think it's clear that they're starting their conquest to advance the assets, and a lot of people I think have been squeezed. And that gold bar, you can see it's almost like it propelled it forward. That without that resistance barrier in the way, they can move it even easier. I see that. I think that's where the majority of the people got squeezed. A lot of people shorted the 161 and thought it was going to come down, and they all just got squeezed in that violent upwards movement at the end. It's like it got easier at moving the higher it got there, and that's evidence of squeezing. It's evidence that it worked essentially. That the public otherwise tried to short today, and it ended up blowing their socks off. Now it's approaching a 261 that's also in line with a 1.
Maybe. It I'm thinking it might just get stuck up here. I don't think they want to give back a lot of the grind. A lot of people have shorted it and they're waiting for it to come down and um, yeah, I think a lot of people think what it's coming up off of a 2.5 ATR. That's the lowest I've ever seen it during market hours, to be honest.
It's just coming back to test the 188, 200, maybe red zone. Centralizing, I think, for the there. Maybe a head and shoulders, an inverse head and shoulders inside of it could form or something strange like that, like we were seeing in the morning. That's the 188, and it could be making the head too. It could end up looking like an inverse head and shoulders by the end of it. Like the small V point that's left inside the M up top has still yet to be hit. Yeah. Well, the imbalance is definitely slowing it down a bit. And there's the V point. Of course, the head to the inverse head and shoulders could be forming. There's a moment left until final. Now we came back to make like what was kind of like a head to head and shoulders just before the report. 30 seconds until the imbalance, of course, with the B point having been cleared and all the B points on the bottom also having been cleared. all the way back to the red zone. Good initial profit taking spot for any hedges made. Stepping on top of the gold bar as well. All of what is sold off will be bought back up in the name of making it through the highs. Yeah, the B point, all the way back down there. I don't think that's ever been tested before. I think it's a trap at the end of the day. They want to see people turn into sellers. If you got a short, nothing to have is stop and profit. Likely to get hit from what I can see. Oh, okay, okay. Yeah. Yeah, I think we're gonna get a lot more days like what we have today where it's gonna benefit like very slowly in the long term upwards, and we're gonna take back like a lot of the spikes, and basically it's just gonna benefit the holders and a lot of small short term hedges along the way. Oh, let's take a look. Right. See. Okay. Yeah, I'll have to take a look at that next time you see it. I'll take a look at it. Interesting. Okay. Yeah, I'll have to take a look at that. I think it's like a symmetrical triangle. We're going to try and break the top line of the triangle pretty soon from what I can see. Yeah, I noticed that we have one of these situations where the blue line is straight down and the orange one is stayed up. Suggestive of that it is just going to get bought back up as well. And a spike out of the bottom of the triangle could be equal to the one out of the top by the end of it all. Yep, I saw the blue line meeting the green. I think it's yep. Yep. Yeah, it was atrociously low today. Closing bell might have some bit, but
It's basically ending at that symmetrical triangle support line as well as the red line there. We've basically faked everything out of the bottom of that triangle, returned back to it, and this is the closing bell. Ideally, I want to see it break that top line. I think it will shortly, but
Yeah.
That's how it ended up today. Looking pretty good. Hopefully you guys had a wonderful day, and I'll catch you guys later. Yeah, yeah, anytime. Take it easy, guys. Have a good one. See you. Yo, what up? What up? This guy.